Hey everyone, me Kevin here. Welcome back to another market open live stream, and we've got a red market today. There are a few reasons for this. One of the reasons is really Jerome Powell. Jerome Powell has a Senate discussion today. I wrote down a few notes today here. Jerome Powell talks in the Senate today, and we already know that Jerome Powell is expected to essentially tell the Senate, "Hey, we are ready to taper." And not only are we ready to taper, but we're ready to taper faster than we've tapered before. And this is possibly leading to some pain in the markets. We've got the fact that he said that supply bottlenecks were bigger and longer lasting than expected. That's something I will remember. We know we've got Evergrande, a lot of fears surrounding Evergrande. Had a video on that yesterday. So yesterday evening, actually, check that out. It's Evergrande, worse than we expected. Watch that video. That's the title. We've got, let's see, Evergrande bondholders pushing for a default. I found this was really interesting. Really, it makes sense. If you're a bondholder and you're involved in Evergrande, you kind of want to get your stake as soon as possible. Because remember, when you're a bondholder, you have a share of asset, or you have a claim to a share of assets at the company. The company just becomes less and less valuable as time goes on. So oftentimes, as a debt holder, you're kind of like, hey, I'm first in line to start claiming equity here. So why don't you all just go bankrupt like ASAP? So that way my share is larger than it would be if we drew this out for another 6 months. Okay. I thought that was sort of an interesting perspective as well. We have obviously we got data coming out, although most of the data comes out next week in terms of inflation, jobs. So we don't get a jobs picture this week. It won't be this Friday, even though this Friday will be the first Friday. We do have a lot of talk about inflation, specifically Brazil. Big reports about massive increases in the price of food coming out of Brazil, specifically because they had these insane droughts, and then they had this crazy Arctic frost, and it was sort of just like a double whammy of screwed. And let's see here. I wrote down this inflation figure that we were looking at. It was a UN index jumped 33% for international food inflation over the past 12 months. So some real inflationary concerns again. So it's not just the supply chain bottlenecks, but caused by COVID or whatever, but it's also climate change and a lot of other factors that are essentially leading to a market that's indicating higher potential inflation for longer. Now, you still have the Federal Reserve, the Bank of England, the ECB suggesting that don't worry, inflation is transitory. But I think most people expect it to be persistent longer before it actually fulfills the transitory dream or vision. Also seeing obviously 10 years spike, 10-year treasury yield spike up just over 1.5% now, around 1.54%. This comes at the same time as we see margin debt increasing substantially, highest levels of margin debt that we've actually ever seen before in U.S. history, which is kind of incredible to think about. But and here I was thinking that people would want to have less debt, but no, nobody wants to sit out the market, so people keep taking on more debt. Anyway, let's take a look at futures here, just so we can get a picture here. We've got the Dow Jones Industrial Average down 0.5% or 174 points. The S&P futures down 0.89%. That's almost a complete 1% there. A NASDAQ Technology futures down 1.56. And let's see here if we can get... did they just change the little front of their... Here we go. Hold on. U.S. There we go. I feel like they changed this a little bit. There's the Russell. Oh, that can't be right. Hold on. That's bizarre. See, why is the Dow down here? But over... Yeah, no, that must be yesterday. Yeah, that's yesterday. That's interesting. They don't give us the Russell. Okay, fine then. So anyway, let's go ahead and take a look at pricing in terms of what we've got going on in the stock market. As usual, this video, though, is brought to you by Public. Go to metkevin.com/public to get a free stock worth all the way up to $70. They don't use payment for order flow. They don't buy or sell your information. And you can follow me on their app by following at Meet Kevin on Public. Go to metkevin.com/public. Get up to $70 totally for free. All right. So here we have Weeble. All right, let's see what's going on here. We're also watching Charge Up because we've got a lockup expiration. All right, let's see what we have in the market. Yes, the volatility index spiking. Volatility index, at least presently, up to 2108. Nowhere near that pain that we had about 8 days ago on September 20th. All right, what's in our pre-market? So I'm going to go drag pre-market over here for what it's worth, make it a little easier for us. And there, we'll throw right there. Okay, perfect. All right, so we have Camber Energy. Boy, one heck of a momentum play here. A full 625% up after being up 33% yesterday. And you've got Ford Motors. Ford up 3.3%, despite the market being relatively red today. You've also got recoveries holding on to green here. You've got Macy's, Spirit Airlines. You've got Walgreens and Southwest. Financials like JP Morgan, slightly green. Not much green. We've got about a page and 3 or 4 stocks here that are green. It's a relatively low number of green stocks. I'd say we're probably going to be at about a 90% red day today. I'm sorry, probably closer to 80%. I think we'll be at that full 90%. And then towards the downside here, not necessarily dives that I'm seeing here in just making sure I'm sorting this properly. Not necessarily seeing dives in these. Highest I'm falling is seeing a fall here is about 3.81% at Emrin, 3.3 at EXPI. Going to crypto. Oh wow! All of a sudden, Bitcoin is taking off here within just literally the last. This looks like the last 2 minutes here. We had about a $500 move just now within minutes on Bitcoin. This is the minute chart on Bitcoin. It does look like over the last. If I go onto the 30-minute candlesticks here, we have been falling down on Bitcoin. It does look like Bitcoin is retracing a little bit, 42.3 right now. We have been tracing back. Looks like somebody just bought the dip somewhat heavily. It does look like Ethereum is following in that footstep. Ethereum was down to about 29.06, now at about 29.50, slightly turning right again here. Looking at trading on ADA, very similar chart pattern here. Did fall to about 211, 213 now, and also trading back down as that sort of buy the dipper there is getting U-turned right now. That is a very sharp U-turn that we're seeing here. All right, so going back. So looking at the losing stocks today, EXP down 3.31%, but at $50. You've got, which, is a decent price. Cloudflare has been rotating down for a few days now, still doing phenomenally. I mean, even at 220, this stock is really just trading for August pricing. You've got Matterport down another 2.92% today, about 3%. Canoe in that Matterport there is almost under 20 again. Thank goodness. Finally, we might have a buying opportunity again for Matterport. Open Door Tech might be going under $20 as well. And now that one's been under $20 for a while. People are excited about that one being over $20. Anyway, Upwork, Stay at Home Play down 2.47. Metamaterial down. Solar Edge down 2.3. Snowflake 2.37. Let's see. QuantumScape back to $26. AMC back to $38.45. Dutch Bros down 2% here in pre-market. SoFi Technologies $17.35, down about 2%. Square down almost 2%, $2.53. Square's actually getting a little cheaper I see that the stocks are red, but the stock's still more expensive than what I've been used to. 221 for Etsy. All right. 126 for a firm. Only gonna on this kind of red day, only gonna give us 185 as a discount, 1.85%. Kind of boring, honestly. There's definitely red in the market, but it's not a very deep red. This is the pre-market here, for example, on Tesla. Take a look at this pre-market chart here. Just a big old pre-market sell-off the second pre-market opens up. Really, the minute pre-market opens up. And you really had that sell-off for about 16 minutes in pre-market. That sell-off did continue for about a couple hours, and it slowly recovered. So last few hours, we've had a little bit of a recovery so far, which is good. Let's do a little refresh on the futures here. See if we're trending in a direction. It's hard to tell right now. It does look like we have a little bit smaller losses here on the Dow. Dow only down about 1.6% now. Was down as much as, well, at least from what we've seen in our stream here, about 170, 180. All right. Cheers to the monster. Let's see what we got else here. All right. We have a new announcement here from Janet Yellen. Looks like okay, so there's a particular date known as the X date. The X date says we will run out of money, and we will not be able to pay things like Social Security and amongst other things, starting a certain date between October 15th and November 4th. Janet Yellen has now updated her estimates, and the current date is now October 18th. October 18th is the crisis mode date for the government. Now, I do think this is very interesting because we will have income, a substantial amount of income coming to the government around October 15th as income taxes are paid. A lot of folks are pay their taxes on extension, and maybe if they have not made estimated payments, or maybe they have, but they need to make another payment. Who knows? Whatever, right? October 15th is such a date. All right. All right. So someone here says they have a 2x leverage position on Square opened at 130. Do you think it's smart to close, or should I be in the clear? I mean, I don't know that I would close that on I mean, look, I don't like leverage, but I don't know that I would close that on a red day like this. Probably wait for a little bit of green. But hey, if it's making you nervous, close the borrowed stuff. It's not your stuff. So yeah. All right. Let's see. Cash. Elsa, is there anything? No. If somebody thinks Lucid's gonna have 5,000 cars by the end of the year, and if the market actually thinks that, I will short Lucid, because that's no. Like, if you get 750, I'd be impressed. Let me put it that way. I would be very impressed to see them roll out 750 in their first quarter. That's it. I would be impressed. I imagine their goal is probably slightly higher, but I'd be shocked. Let's see here. When will Lemonade be ready for car insurance? Who freaking knows? They got home, but yeah, I'd love to bundle home and auto with Lemonade. That sounds awesome. Yeah, China stocks right now are definitely an interesting one. For sure. So, okay, let's see here. Rob H says 750 would be impressive. Do they have an EV copy machine? Ford will do one for, yeah, I mean, 3 to 4 years. That's different than talking about the next quarter, right? Yeah, technically the lockup is today. Still got my position in the XBI. Yep. All right. So let's see what's going on with crypto. Actually, now falling more. What a crazy little bounce that we had there on the minute chart. Potential buy the dipper here has now turned into actually a continued decline in a crypto. So fascinating to kind of see the crypto sell-off. I really think you've got a lot of pain from this Chinese crisis. And I remember you can hold cryptocurrency, but you cannot financially transact in cryptocurrency in China. So it makes sense that if there are fears, if there's a property crisis, I certainly would liquidate my crypto to go buy real estate is something that I would do. See, I look at it as RCC, right? Real estate, cash, crypto. And I look at that as like, those are things that I could dump if I want to go shopping in the stock market. So, presumably or presuming that that those are at least holding some form of value. All right, let's go see what some headlines are that we have here. All right, let's see here. I do want to know what the news is on Ford, honestly. Let me see if I can pull that up really quick. I will be transparent. I tried to what's it called? I tried to test drive a Ford, and they're like, "Yeah, we don't have any." I'm like, "Oh, all right, well, never mind then." And then I'm like, "But if you don't let me test drive, then I have to buy a Lucid." And they're like, "Yeah, we just don't have any cars." And I'm like, "But Lucid," they're like, "Yeah, and we still don't have any cars for you." Like, okay. Oh, I thought it was funny. But hey, that who knows? Maybe that's just one sample. Remember the what is it? The plural of anecdote is not data. All right, so okay, just seeing here. Bullard, Fed should let balance sheet shrink next year. Well, yeah, we know that. Yellen to the Hill. We now estimate that the Treasury is likely to exhaust its ordinary funding measures if Congress has not acted by October 18th. Got it. Talk about that. Jim Cramer's now tweeting that inflation is too much for the market to bear right now. You see, get it? Because it's a bear market. Anyway, it's really just a more bear day. Let's see what he has to say.
Get to be concerned as watching stocks go lower.
Okay.
Like he's basically saying it's an opportunity to buy.
And adjust volume a little bit here.
It's an opportunity to buy.
Well, something else we've talked a great deal about over the last year is Robinhood, that trading platform. Its CEO Vlad Tenev defended his company's platform and its users. It was in a Wall Street Journal op-ed, slamming critics who call the app gamified. He says a ban on payment order flow, by the way, unlikely to actually help retail investors. That's something that has certainly been raised a number of times by SEC Chair Gensler. We've talked about it. Tenev goes on to say, quote, the democratization of markets threatens the existing order. New investors are trying to build stable financial futures and reverse the...
Look, if I have to hear somebody say they're trying to democratize finance again, I'm about to vomit. Look, I'm going to give credit where credit's due. I think that Robinhood was the first to use this democratized finance idea. But literally everybody now wants to democratize everything. Like somebody's about to come around and democratize your mom. I'm tired of it. Like people are like, oh, we're going to democratize housing. We're going to democratize construction. We're going to democratize this. We're going to democratize. Shut up. Like pick a different word. Sorry. Like just so over it. I'm tired of that one. All right, let's see here. Ford climbs 5% after it commits $11 billion to build 4 new electric vehicles and battery plants. All right, let's see here. Ford stock climbed as much as 5% on Tuesday after announcing plans to build a new battery and EV plant. Well, wow, I wish my stock would go up 5% if I just made an announcement. All right, let's see here. Ford stock climbed as much as 5% after the company ramped up its commitments to EVs, shares hitting a high of $14.84. Partnership with SK Innovation, Ford will build 3 new battery plants, 2 in Kentucky and 1 in Tennessee, along with a factory dedicated to building the upcoming F-150 Lightning pickup truck. The plant will have the capacity to produce enough batteries for 1 million EVs per year. 1 million per year. Wow, that's actually a huge plant. Holy moly. Oh, it's not going to be operational until 2025. Tesla kick your butt by then. Let's see, Tesla by 2025. Gosh, they better be at like 5 mil. That'd be great. But that's great. 2025, good. That's great. Ford has incredible debt. Let me see that. I will tell you my thoughts on that. Let's take a look here, and then we'll go financials. Okay, let's see here. Alibaba has announced that they are no longer selling mining equipment for Bitcoin. Wow, Alibaba is trying to suck up to the Chinese government. Imagine that. That's interesting. Kevin Dusenberry here says that Ford will beat Tesla, and that and Michael W said Ford needs a charging network. Thumbs up for the democratize. Thanks, I appreciate that. Yeah, democratize your mom. All right, so okay, let me look at debt here. Balance sheet. Okay, so Ford's balance sheet. Okay, what do we got? 2020. Okay, the last one I have is 2020. Well, that's old. Yeah, this is a little messy. Okay, let's see here. Liabilities. So total current liabilities at 97 times million is billion. 97 billion in current liabilities. Cash at 49 bill. Receivables at 52. Inventories at 10. Okay, so you're almost there. Yeah, you've got a little bit more current assets than current liabilities. Let's see, longer term liabilities or non-currents. Total liabilities, $236 billion. My goodness. And what do those break down into? We'll go back to the sticks in just a moment here. But if I break down total liabilities, that's actually not that easy to pull it down apart right now. It's going to take a little bit more digging to pull out exactly what the heck goes into the longer term. Oh, longer term debt, 111 billion. Longer term borrowings. It's not a lot of lease liabilities. It's mostly just straight up borrowing. Accrued liabilities, pension liabilities, deferred revenue. Those are smaller. It's just debt. Other long term liabilities. Wonder how they add that up. Oh, okay. And then the short. Oh, right. Okay. So total. This is broken up. It's so weird the way they do it here. Yeah, total debt of 236 billion as of the end of the year, and current assets somewhere around 100 mil. So yeah, okay, they got some debt. That's not untrue. I don't know how much that'll truly hamper them in their ability to innovate, though. Yeah, I saw that the pensions actually weren't that crazy high. For what it's worth, let me just read you pensions really quick. Pensions I saw, and then again, this is only the end of last year. Yeah, pensions, deferred. I just saw it too. Defer pension liabilities, $17 billion. I mean, don't get me wrong, that's a lot. But I mean, it's less than 10% of their total debt outstanding. It's like 7% or something like that. Okay, again, still a lot. Okay, don't get me wrong. I'm sure they did. I'm sure the 2020 numbers are probably worse than what we have right now in terms of, if I went to the quarter, I think it'd probably be better. But I'm not going to do that right now because I just don't really care that much. So anyway, we will instead look at what's going on in the market. So let's see here. Dow recovering here actually is somewhat. It is only down a third right now. S&P futures down about 0.64. NASDAQ still leading with the NASDAQ Technologies down 1.22%. If we look over here, this is a pre-market right now is being led to the downside by Emrin. This is momentum play. Yelp down about 3.67. Cloudflare 3. Matterport 3. Here's Canoe again. Moderna coming off a little bit as well. Lots of 3% declines here. This is not like really scary right now. SoFi 2%. So yeah, the color's red, but I mean, this feels like nothing more than a little violent dip opportunity. Robinhood, not Robinhood. Well, okay, Robinhood's down 1.65, but I wanted to look at BTC here. A little bit of recovery there again on BTC. So this is the second time now we've popped off that 41.8 figure. And Ethereum sitting at that 29.3 for what that's worth. I might do a little bit of a dip buy here. Let's see what we got. Where we sit on ADA, for example. I think I got enough ADA right now. 212. Let me see. I just have to keep them in proportion, so I gotta be careful. So okay, yeah, I actually need to do a little bit of ETH buying, so I will do that. So let's go ahead and buy a little bit of ETH, shall we? Let's buy. Okay, I'm gonna buy 20 coins. Buy. Oh, I'm out of money. How am I out of money? I just transferred money. Oh, what a ripoff. Oh well. How about 15? Dude. Oh, what is this? Oh, it's in USDC coin. Oh, come on. Coinbase. This is so annoying. Just let me buy it in that. Can I not? Would that not be logical? Oh, really? I'm gonna have to like copy address it over to a different Coinbase. Y'all gotta be kidding me. Whatever. All right. I'll just do this crap later. This is so annoying. How Coinbase, make my USDC turn into dollars. Enter wallet address here. Okay. I mean, I'll try really quick in this last minute that we have, but this is okay. Deposit. No, they don't give me a call. There's no deposit address for US dollars. Like, what am I doing wrong? Crypto address. I can't do a crypto address. I don't know what to do with it. It's a transfer. Convert USDC to ADA. Okay, I will try that. I guess I could try to do that. Ethereum. So if I deposit to that, then I do a crypto transfer. But then it says only send ETH to this address. So you can't send USDC to this. There's no convert button. There's deposit or withdraw. That's all you have on Coinbase Pro. Man, that is so dumb, Coinbase. That's it. Short Coinbase. I've spent 4 minutes trying to buy the stupid dip. And you know what? F it. You know what we're going to do? We're literally going to do the dirty right now. You know what that is? I'm going into Robinhood. I'm going into Robinhood right now, and I'm buying my 20 ETH just because I'm like, screw you, 20 ETH, boom, swipe up, bam. Wasn't that freaking hard? God.
Stanley again, as you pointed out.
What did Sharp do?
Be a drag for longer, downgrading. Here's the opening bell here from the stock exchange. You can see the real-time screen back at our headquarters. Here at the big board, Moneyline, a digital finance platform celebrating its recent listing via SPAC over the NASDAQ data analytics startup Amplitude.
All right, look at that. Yeah, that's about 80% red. It's kind of like what we expected, about 80% red. It makes sense.
I went through that perspective. That's very hard.
Owned by others now listed.
They're up against Adobe. Very, very tough competitive business. On their website, they say one of their clients is Postmates, which does no.
Dude, what are you talking about? Sell ETH to USD, then USD to ADA? How hard is that? I don't want to sell ETH. It's USDC. There's none of that. It's not as easy as you make it appear. Somebody says go to your profile. This is trash. Oh my gosh. So I'm in my USDC. I could withdraw my USDC to Coinbase.com. I don't want to do that. To a crypto address. I don't want to do that. I don't want to deposit more ETH, or I'm sorry, USDC. I can't make any kind of transition on my portfolio. I'm whatever. Screw it. It's just really dumb. Coinbase, y'all suck. I'm like tempted to just literally, well, it's Coinbase Pro in fairness. Okay. So it's only $5. Go to USDC trading pairs. What the hell is that? Like, seriously, Please, what is a trading pair? What do I care? I just want to turn one thing into the other thing. I click on USDC. There's no trading pair. It's just deposit and withdraw. Like it is the stupidest thing I've ever seen in my life. Easier on computer. Don't use Pro. Coinbase sucks. Move to Voyager. Pretty sure buying on platform like Hood, you don't. I don't really care. I really don't care. I'm not going to go buy Starbucks with my Ethereum anytime soon. I really just don't care. If I have I don't have the address. Whatever. I really don't care. I want to make money. All right. So let's see what's going on in stocks now that we're done with that. Okay. Then let's see here. Okay, we're done with pre-market. So let's go ahead and put that over here somewhere. And change percentage. Oh, wow. XL Fleet and high. Well, okay. XL was just there for like a temporary little moment. Go to USDC, click trade, select these. There is no, okay, look, there is no trade. There is literally no trade button. It is just, it is at this point, I mean, please correct me if I'm just blind. Okay. Here it is. USD coin, deposit, withdraw. Like, I don't know, maybe I'm missing it somewhere. Do I click this little thing right here? Trades, transfers? No, that's just history. That's it. Okay, deposit or withdraw. If you click deposit, it's deposit from you get an address or you go to that. Withdraw, you get an address or Coinbase.com. Like, that's not what I want. I want that to be dollars, and I want to go buy ADA or Ethereum or something like that. Oh, really? Mobile is limited? What the fuck? Like, that is like the most basic freaking function, Coinbase. Mobile is limited. It's not your fault. I'm not mad at you. I appreciate you saying that. I'm just like, that's a pisser. That's just dumb. So you have to use the normal app. Why would I do it on normal Coinbase? It's not on normal Coinbase. It's on Coinbase Pro. Oh my gosh. Go to the actual market screen and look up USD to sell it into. Is it at? Well, why do they make it so complicated? USDT. That's USDT. Screw it. We'll do it later. I don't see USDC. Where's USDC? I have to find it. Whatever. Okay, so Camber Energy Momentum Play up 10.1% here. Naked Brand 5.2. Endeavor, Metamaterial, Aurora Cannabis. Aurora, this is like the second day in a row here, isn't it, on Aurora? Let me see this here. Let's see here. Yeah. Aurora Cannabis. Golly, Aurora Cannabis has had a sell down. My goodness, the thing was up at like $20 for a period of time there. Really ran after Biden won too. Geez, yeah, look at that. Last couple of days, you finally had a little bit of love here for Aurora Cannabis, and it's moving forward, moving a little bit right now as well, 3.4, but it's not as consistent as like Aurora Cannabis is moving. Macy's is literally just the stock that will not stop ripping, which is really incredible. Okay. Let's see here. I want to see. Thank you for the donation there on try buying ETH first. I will check that out. Okay. So okay. We have yeah, Macy's doing nice. Poshmark. We haven't really seen Poshmark do much of anything other than just like evaporate. I really want to know why. But social trends have not been good for Poshmark either. Build-A-Bear, Wynn Resorts. Wynn Resorts back to 86. Nice. That's awesome. Hit deposit, hit US dollar, and take you to your bank account. Well, I know I could deposit more cash. I don't want to deposit more cash. There's $200,000 of USDC sitting there. That's annoying. All right. Delta Airlines, United. How are these recovery guys opening up today? So looking at the minute chart here, we've got a recovery on them. Okay. All right. So we've got a recovery on recoveries. Nordstrom's, the airlines, financials are going green here. Where's some pain? Can we get a little bit of pain? I mean, is there anything we can buy the dip on? We've got Matterport, a couple percent. Ooh, Enphase. Okay, here we go. Are we going to revisit 149 like yesterday on Enphase? We might. Let's keep an eye on this one. Let's keep an eye on MTTR. DocuSign, let's go. It's just day after day. It's giving us a gift. It's giving us an opportunity to buy some discounts here. We've got Voyager Digital. I don't know. Is this VG? No, that's not VG. That's not Exchange. We'll wait for that one. That one usually takes 15 minutes to show up since it's an OTC. Oh, wow. EXPI now down about 5.8%. Toast down basically every single day since the IPO. We did a video on this one. Thought it was overvalued. That's a good little dip here. Ooh, Affirm down 3.8% down to 123. Good little dip here. That's good. I'm not like jumping up and down over like, oh my gosh, I gotta have more Affirm. Let's see here. EXP 48. Okay, Palantir back to 26. Yeah, folks got so excited when this thing ran to almost 29 because the thought was that, oh my gosh, it's finally gonna go back to 30, and it just couldn't do it. Couldn't keep it up. Couldn't get a ticket with its head hung low. Head hung low. Couldn't get a ticket. It was a sold out show. Who knows what the next line is? All right. Let's see here. Trade Desk, 376. Trade Desk also kind of rotating down. How long have we been rotating down? Okay. Let's see. I guess Trade Desk has been kind of popping. It's been okay the last few days. Huh. He heard the roar of the crowd. There you go. That was the one I was looking for. Yeah. Good job. He could picture the scene. Okay, so Google down 2.21%. Google's been burning off a little bit here on these sell-offs here. Google has been on a crazy tear. I had options that I rolled into shares. I'm really glad I rolled those options into shares because those options would just be burning, and they were a double. They were great, but yeah, Fang's getting just lit on fire here. No, Palantir does not react well to this. Let's see here. Oh, Austin's it's a pro platform. Well, who cares? Like what? Just because you make it more difficult, that means nothing. And if you're trying to be like elitist, saying like, well, you're not pro enough to figure it out, that's dumb. It's called customer service. It's called being like obvious. This is like literally backwards. It's stupid. But I'm gonna back off Coinbase here because it's just so dumb. We've had feelings like this before. But anyway, market is accelerating its decline. Look at this. Affirm just dropped another about 0.5%, literally in the last 2 minutes here. These are the kind of days that I usually like buying on because you know it's not your stock, it's all of it. Yeah, like that is good. So I really like that. Okay, yeah, EXPI now down about 6.48%. Looks like we're still declining here. I'm going to look here. Smile Direct Club evaporating. Affirm evaporating. EXPI falling. Toast is getting roasted here. Down 7%. Holy moly. We've got Dutch Bros. I was just thinking about a Step Bros joke. But anyway, I don't want to make it. Is down. Matterport down. Okay, let's see here. What is Coin doing right now? Like, I'm ready to just like short this stock. do we just short at this point? Do we go over here and just short Coinbase? That's it. Short Coinbase, everything on Hut 8 mining. Yay or nay? That we're running a poll. I'm running a poll. Short Coinbase and all in with Coinbase dollars on Hut 8 mining. Poll. Oh, there we go. Okay, poll. Yes. Yes. No. Okay, I did it. Somebody says I'm short Upstart instead. Oh gosh. If Hut 8 goes up, Coinbase goes up. Yeah, try that theory over the last 3 months. Compare the two. You will not be happy. Okay, so are we still declining here? Yeah. Oh, Affirm's now down a full 5%. Ooh, I like this. Now we're getting some juice here. Look at that, 247 for Square. Come on, let's see it. This is the Coinbase Pro link for trading USDC for ETC. Sorry, ETH. There's a how-to guide, folks. There is a how-to guide. Start trading. The hell? Oh, that is really. I'll go on the desktop later. That is not something that looks like you're gonna do on the app. All right. Etsy down 3.61 here. Okay. How is Hut 8 doing, by the way? Hut 8. It's at 8.51. Okay. So what else here? Carnival 2.0, 2% to the upside on Carnival. Nice. Macy's 2.9, Rocket Lab 2.3, Fuel Cell, American Air. Okay, good. So recoveries are doing well. Honest Company coming up 0.8%. I mean, I wouldn't even say recoveries are doing well. They're just not getting beat like crazy. Tesla's freaking green today on a day like today. Oh my goodness. Not by much. Not by much at all. Look at that. It kind of ran and now it's rotating down. Like this is about to turn red. But that's a shocker to see Tesla still holding on over there. It's usually one of the first to be red with everyone else over here. Affirm accelerating about 6.2 now. Ooh, I love it on days like this. Matterport, yes. Square, yes. Keep going. Lucid. We're going to have some buying opportunities here. There's Lucid for y'all. DocuSign, 3.3 as well. Hut's down 3. Where's Enphase? Did Enphase go below our number yet? Let's see here. Yeah, let's go. We're about to be under 150. Toast is toast. Oh my gosh, it's so bad. Tesla carrying the NASDAQ. Yeah, let me see this update. Somebody says about MasterCard. That's not a surprise. Let's see here. Is that news? Okay. Ooh, MasterCard rolls out buy now, pay later business. The competition is heating up. Sorry, Affirm. You got competition. MasterCard unveiled on Tuesday a buy now, pay later program that will allow its customers to pay online and in-store through equal and interest-free installments. Okay, so how many? If it's just like 4, nobody cares. That's the thing. Like everybody can do pay in 4. PayPal does pay in 4. Everybody does pay in 4. Pay in 4, big deal. But this is interesting because the other payment processors are going to do what PayPal does and are going to do what the other companies do, like what's it called? Well, buy now, pay later, certainly. But most of them do pay in 4. Pay in 4 is the key. that everybody does. So basically, like you go to PayPal and it'll say, hey, pay, a fourth now, a fourth in 2 weeks, a fourth 2 weeks thereafter, and a fourth 2 weeks thereafter. That's pretty industry standard. If you what's it called? If you have something fancier with a MasterCard, then that's something that's more alarming to pay attention to, right? Like if MasterCard all of a sudden has like a special partnership with Amazon, right? Like that would be horrible for something like Amazon. But we don't actually see that. So I wonder if they're calling it the MasterCard Installments Program. Let's see here. Okay, here we go. Whatever, I'll take your cookies. Meets the needs. Okay, let's see here. So consumers looking for flexible ways to pay. Whatever. Okay, here we go. So your bank. Who's your bank? Oh, whatever bank I have. Oh, okay. 4 easy payments. See, look at it. It's literally 4 payments. This is a PayPal competitor, not an Affirm competitor. Watch for it. I don't know. They make it go so fast here, but wait for it right here. There, boom. 4 easy payments. And they set it right on the little jiffy right in front of it as well. So that's actually not that big of a competitor. Not really worried about that because it's really a PayPal competitor, not an Affirm competitor. Affirm is really when you're getting those partnerships to get that 6 months, the 12 months, right? That's important. Everybody's going to be doing 4 payments. Not worried about that at all. Oh, Enphase rotating. Wait. Okay. I thought it was gonna come up. Come on. Let's get a little bit more discount. All right. So not worried about that with Affirm. Affirm sitting at 120. Toast is recovering. Toast is starting to recover. Matterport broke 20. That's it. We got to do a little bit of a buy. Hold on, wait for it. It's gonna raise my cost basis, or actually lower. It should lower because I don't have a lot of Matterport right now. I think I really want to raise my. Hold on, how many shares do I want? I don't know what I want. Oh, not that many. I just want to buy little nibbles at a time. Let's buy. There we go. 20. That works. 2,500. Boom. Okay, 2,500 of Matterport. Boom, we did it. Okay, so that's actually the first bit that I have there in Webull for Matterport. TTR. Okay, good. And let's now see, where's Enphase? Enphase. Oh gosh, that's Camber Energy. Yeah, no, that's not what we're looking at. Okay, let's buy some Enphase as well. Cause why not? My Webull cost basis keeps going up, but I don't care because cost basis is ill. Nobody cares. And let's buy 350 shares of that. Oh no, I don't want to stop loss. Get rid of that. Buy the dip. Buy the dip. No, don't put a limit in. Just execute. There we go. Okay, good. Cool. All right. And okay. So I did a little bit of dip buying there. Okay, cool. Fun. I would honestly love oh my gosh, somebody says Enphase is going to 150. Look at the chart angle. It's at 150. All I needed was the little thing on the side to say Enphase 150, and I'm like, hell yeah. But I would love for Google to evaporate. So that's and it is doing that. This is exciting. Affirm recovering a little bit as well. We're getting a little bit of a bounce off here. Affirm coming back up. We got 3 minutes of green right there. So by the dip opportunities are escaping us. Palantir, hell, let's go shopping. What else am I doing? Let's go buy. Oh, get out of here. We gotta buy a little bit of Palantir. It's because I actually don't have any Palantir right now. That's because I sold all my options at like 29 something, And so now it's I don't know, a couple thousand shares. Okay, yeah, that works. So now I have to start buying it back. Boom. All right, and 50 Palantir plus Palantir. Okay. Boom. All right. I don't know. Anything else? I got a really good position in Lemonade and Hippo. I'm happy with those right now. It's a lot. So, but yeah, I know Hippo is like what was it? 4.6 or something? It's a steal. I don't know where it is right now. No, I don't even see it down that far. It's not down in discount world right now. This is discount land right here, where the pain is. Come on, the suffering, suffer. Spend that money. This is what we spend money on. We don't spend money on Rolexes. Oh wow, y'all a lot more torn on the whole short Coinbase versus all in on Hut 8 at 59 to 41. That's not as crazy as I expected. I thought that might be a little bit more. Y'all might be more like 90%. So not everyone is as upset about Coinbase, or it's not enough of a reason to be upset. It's just obviously I haven't done a USDC to ETH transaction, and they make it funny. All right. So looking at the upside here, Camber's going nuts. So we got momentum going nuts. Camber, Naked, just set yourself up for when this thing starts going down. Just be prepared. That's all I want to say. I wonder if you can even short it right now. Let me see. Not that I would necessarily want to, because these momentum things could go really insane. But let's see here. Can I short Camber? Market sell. This security is not available for short selling. Yeah, I don't like it when they're not available for short selling, because to me that's just a tell that the market's not able. Like in cases like this, in my opinion, short selling is kind of just like, yeah, let's go back to reality here, and this ain't that. So in the meantime, milk it, But y'all know this. Y'all know exactly how this momentum stuff goes up and it goes down. It goes up and it goes down. It's old news. All right, let's see. Let's see. Ooh, where is it? No, that's not what I wanted. Okay. All right. I gotta pull up the specific ticker here that I'm looking for. So 1 second here. Oh yeah. Okay. I want to look this up. Let's look at the volatility. Ooh, volatility is sitting at 2071, 10.39%. It's almost at the top of where we are in terms of volatility today. Let's see here. That means SVXY, I believe it is. Yeah. This should be down. It's not actually as much down as I would hope. Because we played the recovery here. It's not as down as I would hope. So somebody's asking how I would play this, the VIX. This is a great way, usually, when you get a big fall like this. Because it always tends to revert. And so we played that trade. But yeah, not much of a drop there today. Okay. So not so excited about trading that. I'm excited about trading Camber, but can you do options on this thing? Oh, come on. I can't short it and I can't do options? Oh, yeah. Okay. That's a legit market. That's scammy. That's just nutty. Manipulation tell. Only institutions can short. Yeah, that's screwy. No, I haven't seen any. I don't think Elon Musk is going to join anyone's board. He's so busy. He can't. I mean, his his relationship basically just fell apart because he's so busy. And I feel horrible about that. They just had a kid too. And I thought they were awesome. But they, you never know. There we go. Tesla did go red. We saw this trend occurring. Tesla did go red. It's down about 1% right now. Apple down about 0.7. Win actually went negative. ChargePoint, folks, not like, what a boring lockup expiration. No real suffering here. It was too priced in. It was too hyped up. Boring. Nah, that's boring. All right, so we saw Toast. Affirms back to 122. Palantir's recovering. Open Door. All right, looks like the heat of the moment has passed. 69 on Lemonade. It's not a horrible number. Like physically, like the number, like six. Yeah, in terms of the stock price, I'll take 65. It'd probably have to be lower for me to add. Enphase 151. Okay, Alphabet. Is Alphabet recovering now? Wish you hear it. It actually does look like it's recovering a little bit. Google. It is. Yeah. Oh, look, there's my Google pause. Whatever. All right. What else? Ooh, Tattooed Chef at 1891. Oh, it's doing that good. It's gonna get back to $16, are we? Oh, Matterport coming back up. So I bought the dip nicely there under 20K on that one. Or $20, 20K, what am I saying? Crypto. What's crypto doing? Is it just playing sideways here? Flat? Nothing? Boring? That's what you're gonna do to us? Yeah. That's exactly what it's gonna do to us. It's gonna do us like that. It's unreal. Boring. Okay. What else? SPY down 1%. I'm trying to get these shirts. See, look what I wore. You like this shirt? Come on. I'm working on it here. The SPY is falling. Let me see if I can get you a link really quick to the darn thing. Because it's supposed to be on the little merchant shelf down below, but it's not. And I'll pull it really quick. In the meantime, remember to get a free stock worth all the way up to $70. It's just Teespring's just broken right now. So you have to wait probably a couple days before, but the darn thing is broken right now. Very annoying. But anyway, at least you can get up to $70 totally for free with Public by going to metkevin.com/public. They don't use payment for order flow. They don't buy or sell your information. And you can follow me at BKevin on the Public app, metkevin.com/public. In fact, if there's another little, let's see here. I'm going to pull up the Public app right now. Let's see if is there anything else that's dipping? Because I did move some money over here. What else is down? I don't know. Find me something else that's down. Open Door's falling more. Cloudflare not ready to open on anything like that. How's Google? Piton? No, not gonna be Piton. Google's still at the bottom for the day. Neo. How's Neo? Nah, still sitting at 35. 25 for Lucid. It's not like a spectacular deal here. Matterport trying to come back here. Tattooed Chef. All right, we're gonna look at some headlines here in just a moment too. But okay, Matterport kind of rotating back down. Okay, we'll come right back. We'll see if we want to do any other dip buys here. Hut 8 looking juicy. I don't know. Hut 8's has rocketed. Lemonade, G-Tech Holdings. Oh no. 69 here. Adobe, maybe. I like Adobe. It's been on a tear. It has just been killing it. Oh, but I love this. Oh, it's literally like a waterfall. It's like you're on one of those rides at Disney World or whatever. Like, what's the Jurassic ride? What's that ride called? I don't know what it is. But anyway, Splash Mountain, is that what it is? You go up here and then you go on the ride and it's wee. It's great. That's great. Okay, so anyway, that just reminds me of. Okay, so let's see what else we have here. That's boring. That's boring. That's boring. Okay, here. So what else do we have here? Let's close some tabs here because we don't need this stuff anymore. Okay, so Dow Jones Industrial. Oh, the Dow is now down 300 points, 0.88. It's actually gotten worse. Russell down 0.84. We saw this, like wind was green, for example. Oh, Powell testifies soon. Oh, really? And there's Yellen. What?
And as we wait for that, let's take a look at markets as well. Of course, you can see we are down.
I love a good red day when they go to start chatting. All right. So yeah, all of this has gotten more red. Ooh, the volatility index has gotten even worse. 17%. Is that true? Let me look. VIX. It says 13%. Oh, it has gone up more. Wow. Wow. Ooh, EXPI down 9%. Golly, that's a volatile one. Jeez. EXPI. Wait, it's getting worse again, everything. Look. It's all rotating back down again. Look at this. Yeah. Look, we're going back down, folks. We're going for round 2. We're going for round 2. Here we go. Buckle up. Palantir's down even more. Here we go. We're going off a cliff. It's getting worse. Upstart also heading down 4.95. Redfin 4 straight down here. CrowdStrike, Lemonade's now at the 68. Oh, it's going down even worse. Let's see here. Matterport. Oh, we're going back. Yeah. Palantir has the really good picture though. That's a good one. Now people get nervous. Ooh, I love it. Let's see. Nvidia. Nvidia. Love the company. Wish it were cheaper. This rally has been so insane. I was shocked that it kept going. Like, first of all, I was shocked that I shouldn't say I was shocked that it ran up to the split. I was shocked that it kept going after the split. Wayfair, 276, heading back down. Ooh, Matterport's almost going to be under 20 again. Look at that. Oh, yeah. Give me some more discounts. Affirm, going back to that 120. EXP, all right, okay. So, please try to interview a football player by his friends with basketball wants my notice. So, yeah. Oh, I'll have to check it out. Thank you for that. Whole market sell, run for the hills. Yeah, everybody, go ahead, please. Talked about Hippo, like Hippo. Getting bloody, yes. You know what's stable? Coinbase. Yeah, it can't get any lower. That's why. It can't get any cheaper. What's the breaking news? Breaking news. Soon, Powell and Yellen will testify. How is that breaking news? Whatever. All right. So, you do need to do is you got to get a call option on EXPI. Can you make me super chat to get Weber? No, I won't do that to you. I don't really care. Weber. I don't see Weber doesn't show up. Weber, is it this one? Weber. I don't really care about what. I'm sorry. How's it done? I heard. Oh, ew. That's not that exciting. But I'll add it to the watch list for you. Sure. Yes, EXPI. YOLO call. All right. So what else? How's BTC? Oh yeah, look, everything's getting worse. Well, not necessarily. Getting sort of that double bottom there on a firm. You get the second bite of the apple there. Palantir got a little worse. The XPI. That's the one, the YOLO call. Matterport's at $20. Lemonade 69. DocuSign. Yes. Fall. Good. Enphase sitting at 150. Fall. It's perfect. All right, that's where it's been. Okay, so let's look at some headlines here before we get some testimony. Stocks are dropping as oil prices and bond yields keep climbing. Ooh. Tech takes a hit. Ooh. Sell all you got. Value rotation is back. How long? Treasury yields going up. Mega cap selling off. Oh, shit. That's getting boring. Where's the value? Where are the stocks? Value stocks, most notably energy, financials, and others linked to the reopening, enjoyed a day in the sun. Really? Let's see if Win is enjoying a day in the sun. Oh, down 1/3%. Okay. Let's try Carnival. I think they are actually up. They are up about 0.44. Let's try JPM. Yeah, flat. Oh, that's not much of a day in the sun. That's a boring day in the sun. Like Camber. Okay, they're having a day in the sun. But they also can't be shorted. Like I can't. Like I want to shade Camber. Like give me an umbrella so I can go over there and take some of that sun away. They're having too much fun. We need to spread some of this fun around. Take those fun coupons and throw them around to everything else. You know, Camber's hogging all the fun right now. Buy Polster? Not me. I'm so over the other car companies. You know, it's just more and more you realize just how far ahead Tesla's. I know it sounds crazy because I do still like Neo and I've got a place for Lucid too, but nowhere near Tesla. So Autodesk, this is another one I'm watching too, along with Hippo. But I've got a position established in Hippo, so I'm good with that. Autodesk. I'm really trying to grow my position in Affirm and Enphase right now. I'd like Affirm honestly to go back to like 110, but sometimes I say these things like I'd love for it to go to this price, and it just never does. So I have to be careful about that too. But I mean, we just added like crazy here to some of these. But we're still rotating down. Look at Palantir is just evaporating. Like this is great. Enphase under 150. Did it go? Did it break? Let's go. Oh, that's juicy now. Look at that. Ooh, we got it right here. It was that second little candlestick-ish, something like that. So I added. Now it's at 149. Ooh, that's juicy. Somebody here says under 100 for a firm. Yeah, look, if you feel like you have too much Hippo and you want to diversify, I'm not going to feel bad about it. You do whatever you want to do. Firm 119, nice. Let's see here. Affirm. Oh yeah, okay. Everything is kind of continuing to sell. Look at these spark lines here. It's getting worse. All down. No. There's really no rush because look, things are just going. Look at Tesla. See, I don't know. I'll hold my thoughts. Volatility is still going up. It's still growing. It's getting larger, way faster than expected. All right. Let's see. Stocks are dropping as oil prices, bond yields rebound. We saw that. Republican senators blocked to keep the government funded. Well, we knew that was going to happen. Talked about that yesterday. SEC Gensler highlights need for crypto regulation. Basically says that an unregulated market is bound to fail. He's not entirely wrong, in my opinion. I do think some regulation. I know that's blasphemous for some maxis. I get it. But that's just my take. May vote on debt ceiling as soon as Tuesday. Oh, you got to move it up, Nancy Pelosi. Really? May vote on the debt ceiling as soon as Tuesday. That's interesting. That I would be shocked. Okay. Okay. All right. So Ford is building EV mega campus to compete with Tesla Gigafactory. Ooh. This is what we talked about earlier, like the 7 billion with trying to get to 1 million vehicles by 2025. It's gonna be slow. It's gonna be too slow. Mega campuses in Tennessee and Kentucky. I think it's great though that they are doing it here in America. Like that, I like that. I support that. Now, mega campuses sound a little like gigafactories. Tennessee project will be called Blue Oval City and costs about 5.6 bill. I mean, that's cool. I'd love to go to that. That, like, it's obviously not, it doesn't exist yet, but I just think it'd be so interesting to see those kinds of factories. Battery facilities should create about 5,000 jobs. That's so crazy. The numbers are so big. They are smart for finally catching up and realizing like we need to go electric. It's smart. I think they're a little behind though. Ford all talk. I don't know if they're all talk. I don't know. I mean, I think for right now it is all talk. You are correct. Right now it's all talk. 2025 headline: Ford takes massive loss selling ice factories. Y'all jaded. Oh my gosh. It is too slow compared to Tesla. I agree with that. Yeah. Oh my gosh, you all are bad. Ford goes bankrupt after selling factories and firing now useless staff for pennies. Oh my gosh. Jeez. Oh man. Okay. What is this? Tesla isn't acting like a growth stock. Something is going on. Ooh. Stock in Tesla didn't act like shares of a fast-growing leader in the rapidly expanding high-tech market for EVs on Monday. Rates rose and tech stocks fell, but Tesla continued its upward march, behaving like a traditional auto company. What gives? That is an interesting argument here. What's their reason here? It's an interesting observation. It's not really an argument here. Tesla isn't valued like a traditional automaker. It typically struggles when rates rise. True. But don't worry, you got your day today. Yeah, they just made an observation. They didn't really provide a conclusion here. Boring. Okay. AMD CEO sees chip shortage ending in 2022. What part of 2022 would be nice? 20 new factories coming online this year and similar number expected next year. Where's the bottom line? That's it. They just said next year. Okay. We'll begin to ease. Okay, see, words matter. Yeah. October 18th, Farden, but yeah, we saw that. 18th on running out of money there. Carrier Global as a buy the dipper. I have no idea what that is. Second half, Rob H. Oh, thank you for that. Carrier Dipper. I don't know what that is. Carrier. Are you talking about Carrier? Oh, you mean like the stock Carrier dipping? Is J-Pow up? I only see Toomey up right now. Sell a put on EXPI. Oh, Matterport. My husband is a general manager for GM, 30 years, and I can tell you they had better EV news than Ford, but didn't spike 5% facepalm. Yeah. No, I know the HVAC company here. It's down 1%. Oh, it's been falling though, huh? Yeah, look at that, falling along with the real estate industry here. All right, what are they talking about here? Let's see here.
2008. Remember, we were having a surge of inflation.
They're not really showing Powell or Yellen yet, so we're not quite there yet. We might end up watching them though. We'll see here. They're, like I said though, they're not up yet. All right, let's see here. Mhm. Did you see the Cadillac EV sold out in 10 minutes? No, but it also doesn't surprise me. I wouldn't be shocked if they had an artificially low number of actual vehicles available for reservation. Oil prices rise above $80 for the first time in 3 years. Oh my gosh. All right. Oh, Yellen's talking now. Let's see.
Federal debt will expand in terms of issuance.
Why are they not covering them? Hold on. I will get to the bottom of that. Hold on a sec. It's Yellen's turn to talk. That means get the other guy off the TV. Come on. Oh my gosh. One of these days we'll be able to actually get Yellen on TV. Is this it? Come on. Nope, that's the House of Reps. That's boring. Okay. Oh, and any minute now we'll get to Yellen since CNBC doesn't want to play it. U.S. Senate. That looks promising. No, that's not. Are you serious? Oh, this must be it. No, armed services. My goodness, none of the C-SPAN channels are covering Powell. Are you serious? That is insane. I am blown away. All right, we'll try it a different way. Yeah, they're still playing Fed here. All right, that's fine. All right, no problem here. 1 second. Pull it up separately. No, I know. I see it on the websites and that. I got it. All right, here we go. All right, let's see. Maybe. Come on.
The relief dollars in those bills. And when we last met, our department was busy.
I can't hear a word of that. Hold on a second here. Let's see. Why is it so quiet?
Well, we still have much more work to do. We have made.
No, that feed sucks. Okay, I'll try YouTube. 1 sec. All right, we'll get it. Hold on. There we go. There we go. This should work. Nope. Can't get it. Okay, hold on. Let me just play here for a moment. Give me a sec.
This is the impact that works through the real economy of these inflationary pressures and supply chain pressures. So
Richard,
hold your
always
hat.
appreciate.
Keep your hats
Yeah,
on.
sorry.
We're in for some volatility.
All right. And yeah, 30 years is not transitory. And I'm glad to hear you're gonna live to be 112.
I just want to be as old. I want to be as old as quarterback Brady. That's all I care.
All right.
That sounds good. Richard Fisher, thank you.
See ya. Bye.
We'll stay. We'll staying with the markets.
It's just their opening statements right now.
We are joined by Joe Livornian, a Texas chief economist of the Americas, former special assistant to President Trump, and Anwiti Bahaguna, Columbia Threadneedle Investments senior portfolio manager and head of multi-asset strategy. Good morning to you both. Joe, I'll start with you. I'm going to ask you the same question I just asked Richard Fisher. Why do you think rates are rising?
All right. I cannot seem to get that going on this. So I'm going to try one more trick here. I will go to a different one. Yeah, because I do want to see what Yellen is saying right now. It's just their opening remarks. So let's try this one. New trick.
I think many of us knew the recovery could run up against unforeseen challenges. And we wanted communities to be able to devote resources where and when they saw fit. I want to note that this flexibility is paying off now, especially with the spread of the Delta variant. Harris County, Texas, for instance, has used this funding to boost its immunization rate, offering $100 to each person who gets their first vaccine dose. For the relief dollars not yet out the door, Treasury is doing everything it can to expedite their delivery. The Emergency Rental Assistance Program is one example. Prior to the pandemic, there was essentially no national infrastructure to get money from government coffers to renters and landlords. Building that infrastructure has been a massive undertaking for states, localities, and tribes. The program is scaling up quickly, with 1.4 million payments made to help struggling renters keep a roof over their heads. Still, too much of the money remains bottlenecked at the state and local levels. That's why our Treasury team has worked to eliminate every piece of red tape possible in order to ensure more payments can get to renters and landlords. But
Finally,
states and localities,
the rent relief has been a disaster in this country.
Barriers that can speed up distribution of rental assistance funds. I'll end my remarks there, except to say this. It is imperative that Congress address the debt limit. If not, our current estimate is that Treasury will likely exhaust its extraordinary measures by October 18th. At that point, we expect Treasury would be left with very limited resources that would be depleted quickly. America would default for the first time in history. The full faith and credit of the United States would be impaired, and our country would likely face a financial crisis and economic recession as a result. We must address this issue to honor commitments made by this and prior Congresses, including those made to address the health and economic impact of the pandemic. It's necessary to avert a catastrophic event for our economy. Senators, the debt ceiling has been raised or suspended 78 times since 1960, almost always on a bipartisan basis. My hope is that we can work together to do so again and to build a stronger American economy for future generations. Thank you, and I'm pleased to take your questions.
Thank you, Madam Secretary. Chair Powell, you're recognized. Thank you for joining us.
Thank you. Chairman Brown, Ranking Member Toomey, and other members of the committee, thank you for the opportunity to discuss the measures we have taken to address the hardship wrought by the pandemic. Since we last met, the economy has continued to strengthen. Real GDP rose at a robust pace in the first half of the year, and growth is widely expected to continue at a strong pace in the second half. The sectors most adversely affected by the pandemic have improved in recent months, but the rise in COVID-19 cases has slowed their recovery. Household spending rose at an especially rapid pace over the first half of the year, but flattened out in July and August as spending softened in COVID-sensitive sectors. Additionally, in some industries, near-term supply constraints are restraining activity. As with overall economic activity, conditions in the labor market have continued to improve. Demand for labor is very strong, and job gains averaged 750,000 per month over the past 3 months. In August, however, gains slowed markedly, with the slowdown concentrated in sectors most sensitive to the pandemic. The unemployment rate was 5.2% in August, and this figure understates the shortfall in employment, particularly as participation in the labor market has not moved up from the low rates that have prevailed for most of the past year. Factors related to the pandemic appear to be weighing on employment growth. These factors should diminish with progress on containing the virus. The downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower wage workers in the service sector and on African Americans and Hispanics. Inflation is elevated and will likely remain so in coming months before moderating. As the economy continues to reopen, we are seeing upward pressure on prices, particularly due to supply bottlenecks in some sectors. These effects have been larger and longer lasting than anticipated, but they will abate. And as they do, inflation is expected to drop back toward our longer run 2% goal. The process of the reopening of the economy is unprecedented. As it continues, bottlenecks, hiring difficulties, and other constraints could again prove to be greater and more enduring than anticipated, posing upside risks to inflation. If sustained higher inflation were to become a serious concern, we would certainly respond and use our tools to ensure levels that are consistent with our goal. The path of the economy continues to depend on the course of the virus, and risks to the outlook remain. The Delta variant has led to a surge in cases, causing human suffering and slowing the recovery. Continued progress on vaccinations would support a return to more normal economic conditions. The Fed's policy actions are guided by our dual mandate to promote maximum employment and stable prices, along with our responsibilities to promote the stability of the financial system. In response to the crisis, we took broad and forceful measures to support the flow of credit and to promote the stability of the financial system. Our actions taken together helped unlock more than $2 trillion of funding to support businesses large and small, nonprofits, and state and local governments between April and December of 2020. This helped organizations from shuttering and put employers in a better position to keep workers on and to hire them back as the recovery continues. These programs have served as a backstop to key credit markets and helped to restore the flow of credit from private lenders. We have deployed them to an unprecedented extent. Our emergency lending tools require the approval of Treasury and are available only in unusual and exigent circumstances, such as those brought on by the crisis. Many of these programs were supported by CARES Act funding. Those facilities provided essential support through a very difficult year and are now closed. The Fed completed its sales of assets from the secondary market corporate credit fund on August 31. We were able to wind down the facility rapidly and efficiently with no adverse impact on credit conditions. We also recently closed the PPP LF to new lending and are managing the pay down of assets in our other CARES facilities as they wind down. We continue to analyze their efficacy and to review the lessons learned. The Fed's actions affect communities, families, and businesses across the country. Everything we do is in the service of our public mission. We will do all we can to support the economy for as long as it takes. Thank you. Mr. Chair, if I may just offer one thing. What I said last week was that we had all but met the test for tapering. I made it clear that we are, in my view, a long way from meeting the test for maximum employment. Thank you.
Thank you, Mr. Chairman. Madam Secretary, last night my Republican colleagues blocked efforts to provide critical disaster relief to millions of Americans, to keep the government open and to raise the debt ceiling so that the government can pay our bills on time, something we've always done bipartisanly, including right after the Republicans passed their deficit-busting corporate tax giveaway via reconciliation. Be brief, if you would. What would be the impact on our economy if they block all efforts to raise the debt ceiling?
Failing to increase the debt limit would have catastrophic.
Is your mic on? Come on, Yellen. There's no way your mic is on.
Event in American history. It would be disastrous for the American economy, for global financial markets, and for millions of families and workers whose financial security would be jeopardized by delayed payments. For example, nearly 50 million seniors would or could stop receiving Social Security payments or see them delayed. Our troops would not know when their paychecks would come. 30 million families who rely on the child tax credit would not receive the monthly payment on time. Unemployment would surely rise. And as we saw in 2011, even coming very close to the deadline without raising the debt ceiling can undermine the confidence of financial markets in the creditworthiness of the United States. It led to a debt downgrade and soaring interest rates, which ends up raising payments on mortgages, auto loans, and credit cards.
Thank you. You made clear that the debt ceiling is about money we've already spent, like the CARES Act that Republicans in Congress voted for and that President Trump signed into law. And now they want to run out and pay the bill. We know it's just wrong. They know it's just wrong. Chair Powell, the most recent jobs report saw, as you point out, saw unemployment decreasing generally, but it also showed a continued racial unemployment gap and the unemployment is rising for black workers. You committed an erring on the side of lower unemployment and a more competitive labor market. Thank you for that. But last week you announced that policy tightening will begin in November with tapering, that interest rate targets will increase next year. Why take away economic support just when workers are getting back on their feet and starting to see glimmers of real wage growth, and when the recovery has failed to reach so many black workers?
We're right now we're buying $120 billion worth of securities every month. And all of those purchases add to accommodation. They're increasing accommodation. And we had set a test for beginning to taper those purchases of substantial further progress towards our statutory goals. We haven't met that yet, but as I mentioned, I think we've all but met it on the path that we're looking at. We would continue to add accommodation, not subtract it, until well into the middle of next year. And we think that's appropriate given the strength of the economy. The test for raising interest rates is substantially higher. And, we want to see, just as you indicated at the beginning, we want to see a labor market that you both indicated, a labor market that's very strong. We want to see.
That's good emphasis, by the way. The test is substantially higher.
We did see before the pandemic.
With emphasis on substantially.
Yellen, the conservative Niskanen Center said the expansion of the child tax credit would result in billions of dollars in spending, hundreds of thousands of jobs in local communities, particularly rural communities. We know raising a child is work, and most of the parents getting CTC are really doing two jobs at home and in the paid labor force. So set the record straight briefly, if you would. Does the expanded child tax credit, particularly a fully refundable child tax credit, does it increase labor force participation and boost local economies?
I believe that it does. I think the evidence shows that very strongly, that it helps parents take care of their children. As I mentioned in my opening statement, we have seen that hunger, the number of families that don't feel their children don't have enough to eat, drops substantially after the first round of payments. We see that parents are using the CTC payments to pay for basic needs, including food and clothing. And of course, it can be used for childcare and provide the kind of support that enables parents to take jobs.
And thank you. Sorry to interrupt. Thank you for the way that you and Treasury have gotten those checks out monthly starting in July. Thank you for that. Last question. Chair Powell, the New York Times reported in February only two out of 417 economists employed by the Board of Governors, 2 out of 417 are black. I appreciate you made the diversity at the Fed a priority. I agree with what you said in that article. Institutions that focus on diversity and do it well are the successful institutions in our society. Cutting it even closer, over its 108-year history, no black woman has ever served in the Board of Governors, not one ever. Do you think the Board of Governors would be a more successful institution if black women had a voice and a seat at the table? Should we make that a priority?
Get it on. Oh, man.
I would strongly agree that we want everybody's voice heard around the table, and that would certainly include black women. And we of course have no role in the selection process, but would certainly welcome.
Secretary Yellen, do you agree with that? That it's time we had a black woman on the Board of Governors?
I do. I think diversity is extremely important, and that would certainly be a very welcome achievement.
Thank you.
Thank you, Mr. Chairman. Let me begin by just stating the obvious. If the government goes on a spending binge, that will certainly require more borrowing to pay for all that spending. Our Democrats have a spending binge underway. They are threatening to dramatically expand that. And if they get their way, that will certainly necessarily involve more borrowing than we would otherwise need. The Democrats have chosen to ignore our warnings about this excessive spending, but they want us to vote to raise the debt ceiling in order to permit the massive spending increases that they're planning. I would just remind everyone, just as the Democrats have the procedural ability to pass this spending on their own, as they intend to, they have the exact same procedural ability to raise the debt ceiling on their own, which they inevitably will have to end up doing. Mr. Powell, earlier this year, there were certainly sectors of our economy, especially the price sensitive, the sectors sensitive to reopening, experienced pretty dramatic but largely temporary price spikes. It seems to me now we're seeing a broader, more troubling kind of inflation. Input prices are soaring across the board, raw materials, electrical components, energy, and consumer expectations seem to have internalized this. The New York Fed's most recent survey shows that they expect 5.2% inflation over the coming year. Despite this and all the growth that we've talked about, as you point out, the Fed is still buying $120 billion in securities every month. And I guess my question is, doesn't the inflation we're seeing now seem broader and more structural in nature than the brief blip we saw, say, in used car prices earlier this year?
It's a good question.
Yeah, yes, I think it's fair to say that it is. Mainly what we've seen is that the supply side restrictions that are so much at the heart of the inflation we're seeing have not only not gotten better, they've actually, in some cases, gotten worse. Look at the car companies, look at the ships dock, or with their anchors down outside of Los Angeles, and this is really a mismatch between demand and supply, and we need those supply blockages to alleviate, to abate, before inflation can come down. We do believe that it will, but however, if you look at measured inflation and what's contributing to it, most of it is still from a very small category of items.
But it's considerably broader than it was. And I would also point out, and I know you're aware of this, but the Fed's projections of inflation have consistently been off. They've consistently been low.
Ooh,
and at some point, I think we need to acknowledge that this is not playing out the way I think the Fed had hoped. Let me shift the topic to a central bank digital currency. So I'm increasingly intrigued by the opportunities that a properly designed central bank digital currency could provide to the U.S. To name a few, instant zero-cost payments, interoperability and programmability with smart contracts, international competitiveness all come to mind. But getting the design correct, getting it right is essential. For instance, the privacy of Americans has to be respected. We shouldn't design a central bank digital dollar that allows the government to spy on Americans' every transaction. And the Fed is certainly not suited to be a retail bank, and so we certainly shouldn't try to turn it into one. In my view, privately issued digital currencies should be able to coexist with a digital dollar if we go down that road. And private sector developers certainly should be able to innovate either on or in a interoperable fashion with a digital dollar. So I'm not asking you to opine on any of these things, but it seems to me the decision about whether or not to go down this road is transformational. And there are very, very important and sensitive design issues that would have to be resolved. So I think that ought to be done in a transparent process with political accountability, which is to say with congressional input. Could you comment on how important you think it is to have congressional authorization if we're going to go down the road of a digital dollar?
I'd be glad to. And by the way, I agree. This is critical work that we want to take forward. So the laws that were, the relevant parts of our law were written long before digital finance was a thing. And and a central bank digital currency could take many forms, it is possible that under some forms you'd be able to make an argument that it would be authorized under current law. But I think this is such a fundamental issue. It would be ideal if this were to be a product of broad consultation and ultimately authorizing legislation from Congress.
Thank you. Madam Secretary, I want to talk about the tax agreement. As you know, Pillar 1 will fundamentally rewrite how profits are allocated among countries and will cede U.S. taxing rights to foreign jurisdictions to some degree. Well, current bilateral treaties would need to be modified to implement this reallocation. And obviously, this requires a treaty to implement, right? In fact, the international agreement itself, I think it acknowledges that by referring to a multilateral instrument, layman's terms, that's a treaty, and that'll be necessary for this implementation. So do you acknowledge that Pillar 1 requires a treaty and therefore a Senate ratification in order to implement it?
I believe there are a number of ways in which Congress could implement it, but certainly ratification of a treaty would be one way in which Congress could authorize, and certainly Congress has to authorize the transfer of taxing rights that's contemplated in Pillar 1.
Well, I'll finish, Mr. Chairman, but I want to stress that we have for many, many decades had bilateral tax treaties that govern the amounts and the manner by which foreign governments can tax American companies. Changing those treaties requires ratification in the Senate. There's no way around that I can see. Thank you.
Thank you, Senator Toomey. Senator Tester is recognized from his office.
Thank you, Mr. Chairman, and I want to welcome both Chairman Powell and Secretary Yellen. This first question is for you, Secretary Yellen. Through the American Rescue Plan, I have fought for and we got targeted relief for local communities.
We can actually jump and fast forward a little bit because the questions are more important. So I'm going to do that because it catches us up about 30 seconds live. Let's go jump on over.
States like Montana, from the receiving the funds in 2 tranches and using.
See, he's kind of still talking anyway. There we go. Perfect. Nailed it. You can't get it on. Oh my.
No restriction.
Oh.
That
come on.
in using the funds that have been allocated or
This year, we will certainly
to use the funds that will be made available.
Maybe it's broken.
Second tranche.
Oh yeah. I'm about to go back to the sticks.
That can be done
was broken.
now. There's absolutely no need to wait.
Congress.
Okay, so they can use that first tranche right now. No need to wait because your mic was on and off there for a minute.
Sorry,
they
yes,
need-
that's right.
Thank you. Do they need your approval to start planning what they might use the rest of the funds for? And to clarify, states with split payments do not need Treasury's approval to start getting the funds that they've already have out the door. That's correct, just to make it absolutely clear.
That's correct, and they can plan how they intend to use the second tranche of funds as well. They can begin
So-
doing that now.
On the second tranche, do you have a timeline for getting the funds to municipalities and states who have received these split payments?
I believe it's a year lag that between the payments.
Okay. It is my understanding that the process for these funds has worked just as Congress laid them out, and it's been pretty predictable. Would you say that is correct?
Yes, I think it is correct.
Okay. And then can you talk to me about the impact that you're seeing in the communities as program funds through the coronavirus state and local fiscal relief fund are getting up and running?
Well, I think we're already seeing a significant impact of these funds. Some of it is being used for immediate pandemic response, vaccination efforts, helping unemployed workers, supporting small businesses, and
Matterport's back under 20 for what it's worth.
to address longer-term needs, including broadband infrastructure, water and sewer. And so these funds can serve a variety of needs and are doing so.
Okay. Secretary Yellen, I want you to respond to something the ranking member said, and I think he knows better, but he said that Democrats want the Republicans to expand the debt limit so that they can spend money. Is it not true that the debt limit is
The heck was that?
because of money that is already spent? That it would be similar to you going down to a restaurant, ordering a steak dinner, paying for it on your credit card, and when the credit card comes back, you would say, nope, I'm not paying for it. Isn't that similar to what we're talking about with the debt limit?
That is absolutely correct. It has nothing to do with future programs of payments. It is entirely about paying bills that have already been incurred by this Congress and previous Congresses. And it's about making good on past commitments, as you said, paying our credit card bill.
Thank you very much. Thank you, Mr. Chairman. I yield.
Thanks, Senator Tester. Senator Shelby from Alabama is recognized.
Thank you. Welcome, both of you. Secretary, Madam Secretary, and Chairman Powell. Chairman Powell, I'll direct my first question to you. The Phillips curve is an economic concept that represents an inverse relationship between inflation and unemployment. Historically, it's been utilized to understand the relationship between unemployment and inflation, particularly in relation to the Federal Reserve's dual mandate of price stability and maximum employment. You're very aware of this, Mr. Chairman. Some economists question the current validity of this concept, as the connection between inflation and unemployment has seemed to grow weaker in recent years.
It's broken.
Chairman Powell, is the Phillips curve still a valid economic model or tool? And have you observed any notable strengthening in the relationship between unemployment,
Bitcoin falling, by the way,
during the pandemic?
Senator, if you go back to the high inflation area that we both recall, there was a very close relationship, a one-for-one kind of relationship, or close to it, between unemployment and inflation. That is no longer the case. There is still a relationship, but we say the Phillips curve is very flat, but it's not completely flat. So there is a relatively modest relationship. The slope of the line is 7 degrees or something, so very flat. Is there any change that we observe in the near term? To get to your last question, not at this point, no.
Do you watch the Phillips curve?
Well, we do, but if you saw, we had 3.5% unemployment and very modest inflation for a couple of years before the pandemic. So it's really not a top of mind concern. The inflation that we're having is, but it's really not related to the Phillips curve.
Would you say that the Phillips curve concept is not valid right now?
It's not particularly binding right now. Inflation is high and the unemployment rate is high, so it's not really the binding constraint.
Okay. I'll direct this question to the Secretary. The stepped up basis, Madam Secretary, is a tax provision that allows for a beneficiary to adjust the basis of an asset to its current value rather than its value when originally purchased. We know that. This provision allows for beneficiaries to avoid paying high taxes on assets that have increased over time, largely due to inflation. President Biden's American Families Plan includes a proposal to eliminate the stepped-up basis. A lot of people believe that such a change would result in a costly tax increase on family-owned businesses, particularly on farms and ranches. According to a study by the Texas A&M Agriculture and Food Policy Center, 98% of the farms in its 30-state database would be impacted by the Biden administration's proposal. The study calculates that the average additional tax liability per farm to be over $720,000.
That's a good one, Jay Brew.
Madam Secretary, do you support eliminating stepped-up basis for state beneficiaries? And if you do, why?
Senator Shelby, I do support eliminating stepped-up basis. The reason is that a very large share of the income of wealthy individuals is simply never taxed. Individuals hold on to these assets during their lifetime. That income is never taxed. And we know that for some of the wealthiest individuals in the country, they pay very low taxes overall because most of their income takes the form of unrealized capital gains. The Biden administration proposed that at death, those gains be taxed, and with careful consideration, not in any way to harm the prospects of family-owned farms or small businesses. There were substantial exemptions to protect them. Even if there is not actually taxation imposed at death, getting rid of stepped-up basis would mean that an heir would inherit the original basis of the asset, and when that person eventually sold the asset, taxes would be paid. But I regard step-up of basis is a kind of loophole that allows a very large portion of income in this country of the wealthiest individuals to go untaxed.
It's some of the best part of real estate there. You're taking it away.
Thank you. Senator,
That's actually what we talk about on this channel or even in the real estate investing course. It's like, if you never want to pay taxes, stepped up basis.
Visit with
1031, 1031, 1031, then stepped up tax basis. You never pay taxes.
potential default. I think many of us, I know the chairman and the ranking member were around when in 2011 our nation got close to that kind of default. Madam Secretary, and I particularly worry about some of my colleagues who are concerned rightfully about additional mandatory spending, but if we were to go into this default basis, would it not be expected that that would cause a lack of faith in the American government's ability to meet its obligations, which in all likelihood would result in a interest rate spike? And is my math basically correct that if there were a 100 basis point increase in interest rates, 1% increase in interest rates, when we're looking at a $27 trillion debt, you're looking at more than a $200 billion a year additional mandatory interest payment. Those interest payments, because of that spike in interest rates, that comes before payment of Social Security, payment of our military, any of our other priorities. And if you extrapolate that on a 10-year basis for concerns about spending, wouldn't that be close to an additional $2 trillion over 10 years of mandatory spending? Is there, Madam Secretary, anything faulty with that analogy or my math?
I don't believe
Congress, get with it.
I don't believe there's anything at all faulty about the math. I think there's no question, but that if Congress were to fail to raise the debt limit, or even if it was feared, if we're getting close, and it looks as in 2011, like Congress might not raise the debt ceiling and we might not be able to pay our bills, that you would expect to see an interest rate spike. And if the debt ceiling were not raised, I think there would be a financial crisis and a calamity. And absolutely, it's true that the interest payments on the government debt would increase. I would be concerned that the dollar and treasury assets, which are regarded as the most secure in the world and serve as the basis for the dollar to be the reserve currency, that it would undermine confidence in the dollar as a reserve currency. And the interest payments of ordinary Americans on their mortgages and on their cars and on their credit cards would all go up in line with higher treasury borrowing costs, and it would increase our spending, absolutely.
And again, this is not something that you could then reverse if suddenly Congress came to its senses. Once you saw any kind of spike in interest rates or confidence losing, once this genie's out of the bottle, there's no putting it back in. Is that correct?
I think that's correct. This would be a manufactured crisis we had imposed on this country, which has been going through a very difficult period, is on the road to recovery, and it would be a self-inflicted wound of enormous proportions.
And we all know that we are in an economic competition with China. Would not this effort in terms of a China that's trying to criticize our withdrawal from Afghanistan, and would not this give additional fodder to the Chinese arguments? And as you mentioned, undermining the confidence in the dollar as a reserve currency. Wouldn't this action potentially also give more credibility to China's effort to try to make the RMB an equal to or potentially even more of a default reserve currency?
Well, certainly it would undermine confidence in our government and in the role of the dollar and the safety of the dollar, which is really never been questioned. The dollar is the safe haven asset when times are turbulent that people feel is absolutely secure. I think China has a long ways to go in reforming its financial markets before the renminbi is a serious rival to the dollar as a reserve currency. But I can't think of anything more harmful to the role of the dollar than failing to raise the debt ceiling.
Again, I know my time's up, but I would just point out to my colleagues that are rightfully concerned about mandatory spending, that interest rate spike and again, 100 basis points roughly is $200 billion a year. My math says that's 2 trillion over 10. That would be spending we don't need to do, and we can all avoid that taking place. Thank you, Mr. Chairman.
Thank you, Senator Warner. Senator Kennedy from Louisiana is recognized.
All right, well, that is both the Treasury Secretary, Janet Yellen, and the Fed Chair, Jerome Powell.
I like how they're cutting that off there. I mean, wouldn't mind watching a little longer. Let's go to Reuters then. Let's see if I can get this going.
You told me 2%. Do you still stand by the prediction?
Got it.
Clearly, inflation this year is going to be above 2%. Just the experience so far this year makes that clearly true. But I think we are seeing monthly inflation rates taper off.
Yes, ma'am. What do you think it'll be at the end of the year, if not 2%?
Probably closer to 4%.
Okay.
And that's already almost must be the case based on what's happened this year. But in my estimation, there are the types of supply bottlenecks that the economy.
I don't want to spend too much time on inflation, and I'm sorry to interrupt, but
I reclaim my time.
talk slowly. What party controls the House?
Yeah, the guy doesn't want to waste his time, and he's asking this crap.
Controls the Senate?
The Democrats.
I believe we can agree that President Biden is a Democrat.
I believe.
Okay. Senator Schumer, who's a Democrat.
This is how he wants to waste his time now?
Controls the Senate floor. And he can raise the debt ceiling by just amending the budget resolution. Can.
It's possible that that could be done.
Yes, ma'am. So why didn't he do it? Why don't y'all do it?
Because
and then
this
we
is,
don't. Let me
because
finish.
this is.
Let me just finish. Why don't y'all just do it and then we don't have this fight?
Because
why do you insist on doing it the hard way?
Because it's very important to recognize that raising the debt ceiling is about paying bills that Congresses
I know,
have
but I just
incurred
gave
in
you
the
a way.
past. And it's a shared responsibility.
So why
And
don't you? I agree
Democrats
with that.
have-
So why don't you just amend the budget resolution?
Democrats have provided votes in the past when both houses of Congress were controlled by Republicans, when the Republican Party was in the middle of reconciliation. 2017 is a good example, and Democrats pitched in to do their duty to raise the debt ceiling.
But I know all that, and and I appreciate your perspective, but let me ask you again. There's a real simple solution. Why don't y'all just amend the budget resolution? It just takes 50 votes by my Democratic friends and the vice president. Why don't you just do that? Problem solved. Done. Easy peasy. Finished. Let's go have a cocktail.
Well, it will be up to the leadership of Congress to.
Were you going to recommend that he do that?
We will confer with them on what is the best strategy to move forward.
Yeah. It's not often, I haven't been around this place as long as you have. But it's not often around here that we have a problem that has an easy solution. And this is a real easy solution. And I get politics. I understand why politically you folks want to have Republican fingerprints on the spending fiscal knife. I get that.
This is kind of exhausting. This is just literally like partisan, just bickering at this point. It's obviously right now we already know that Chuck Schumer is expecting to potentially just have a vote on extending the budget deficit, but it's beyond that. It's budget deficit. It's using reconciliation as part of the potential $3.5 trillion stimulus package, infrastructure package. That's the debt ceiling. It's so much more complicated than it's being conveyed right now because of the negotiations the Democrats are trying to have, right?
Republican administrations, it's important to recognize that. And that means that paying the bills for those deficits is a shared responsibility, and it should not be the responsibility.
I agree
of
with
any
that.
one party.
Very eloquently put, but it's a fact, isn't it? That you and your folks just want Republican fingerprints on the Democrats' effort to tax, spend, and regulate America.
Stock's falling a little bit more now.
Now, it's your prerogative to do that. But this is all about the administration's desire to have Republican fingerprints on it and later call it bipartisan. And you know that, Madam Secretary.
Ooh, Etsy just fell 6%.
Muster, and so do the American people. Thank you, Mr. Chairman.
Senator Kennedy, I rarely speak between witnesses, but I wonder if Secretary Yellen takes you up on the offer to go get a cocktail, if you would pay or you'd skip out on paying the bill and expect Secretary Yellen to pay. Senator Menendez is recognized from New Jersey.
What?
Thank you, Mr. Chairman. I had not intended to pursue this line of questioning, but I must say my distinguished friend and colleague from Louisiana always sparks my interest. Republican fingerprints were all over the tax cuts to the wealthiest people and corporations in America to the tune of $2 trillion. Republican fingerprints for the many years that they were in a majority were all over the budget spending that was unpaid for. Republican fingerprints are all over the politics of this now. When Democrats were in the minority, Democrats did the fiscally responsible thing. They voted with Republicans to recognize the debt that had already been inherited. Not a debt to come, but that which had already been inherited. You all created a significant part of this debt. And now you want to walk away from it. Now, I know that President Trump was the king of debt and bankruptcy. And maybe you've adopted that as your view, but it is not a view in the national interests of the United States. So I love that my friend sparks my concerns. In any event, let me turn to my real purpose here. We have discussed at length how diversity remains a problem at both of your agencies. Chairman Powell, during your tenure, the number of minorities in management positions have barely budged. In the most recent report, the Fed's Office of Minority and Women Inclusion states, quote, the Hispanic participation rate in our workforce has remained steady over the past 5 years. Steady. Well, when it's already pretty dismal, steady doesn't really do very much for me. We recognize that our prior efforts, it goes on to say, have resulted in minimal progress. So my question is, what are you doing about it? What are you doing about it? And then let me just make this a joint question. Secretary Yellen, I see the same thing happening at Treasury. I've raised this from the date of your confirmation proceedings to most recently. I'm really chagrined that I have to be forced to consider not voting for nominees because it's the only way to get the attention of these agencies. But if you're sitting as one of the few Hispanic American senators and seeing what is coming forth from this administration, especially in these two sectors, it's abhorrent. So what are we going to do about it? Chairman?
So let me start briefly by agreeing that if you look at successful organizations in the United States, private and public, you will almost always
Bitcoin's still falling, by the way.
Diversity, a focus on diversity from the top. So I think it really starts with making diversity a high priority. I have done that. My predecessors have done that. If you talk to any of our senior leadership, the people who do the hiring, the people in all the divisions, you will see that they talk about diversity, that they focus on diversity in hiring.
But if it's not high priority, it's a dismal failure. I mean, I hear high priority, but the proof is in the pudding, and it's just not there. So I don't know how high a priority it is when we continue to have the same types of numbers. Madam Secretary?
Whoa.
Senator Menendez, I would say that it is a high priority at Treasury with respect to political appointments that I've been involved with. We are very focused on recruiting and hiring Latinos, and we've been engaging with Latino interest groups to identify and source candidates. Just over the past several weeks, we've extended 3 offers to Latino candidates, including 2 Latinas who will serve in leadership roles within the Department of the Treasury, and we'll announce those soon. In hiring within the department as a whole, we track very carefully the demographic composition of our workforce, and it is a high priority to improve diversity. Every Treasury Bureau has a partnership with Hispanic serving institutions and Hispanic community organizations. We have
Well, I don't mean to interrupt you, but I look forward to seeing actual nominations. Every nomination that I have been asked to cast a vote on here certainly is not Latino.
But they're not all Senate confirmed, but they are
okay,
senior
then I would love to
positions.
see those that aren't Senate confirmed, because as far as I can see, the numbers haven't changed. So I look forward to the announcements, because I would love to applaud progress in a significant way. If I may, Mr. Chairman, one last question. Chairman Powell, for the Latino community, but beyond, expanding access to childcare, wouldn't that improve the labor force participation rate among women? I know so many women who want to get back in the labor force, but they have no access to any affordable childcare that at the end of the day allows them to do so.
So there's a good bit of research that would support that conclusion. Yes.
Thank you.
Lamas of Wyoming is recognized.
Thank you, Mr. Chairman. And let me say something on behalf of the people I represent in Wyoming. And this is not pointed to either party. This is pointed to the Congress of the United States. It is absolutely irresponsible that we are $28 trillion in debt and that both parties sit here and blame each other for what they both did irresponsibly. It's absolutely unconscionable what we have done to the people of this country. It's both parties' faults. It's the Congress's fault, and we need to address it. But we're so busy making each other look like the rat's rear end that we won't address the real problems in this country that led us to be 28 trillion plus in debt and now asking to get further in debt. I'm horrified. My constituents are horrified. This is got to stop. That said, now I'll turn my attention to the Secretary. Secretary Yellen, speaking of horrified, my constituents cannot believe that you support a proposal to require banks and credit unions to report customer data to the Internal Revenue Service for transactions of $600 or more. There are obvious privacy concerns for all Americans here, and this represents a dramatic new regulatory burden for community banks and credit unions in Wyoming and elsewhere. Our banks will have to hire contractors to rat on their customers, implement new computer software, deploy resources better used elsewhere in order to collect data for the government. Bank customers are not subjects of the federal government. Banks do not work for the IRS. This is invasive of privacy. Wyoming's people literally will find alternatives to traditional banks just to thwart IRS access to their personal information, not because they're trying to hide anything, but because they're not willing to share everything. My question is, are you aware of how unnecessary this regulatory burden is? Do you distrust the American people so much that you need to know when they bought a couch or a cow? I am astounded by what you're supporting and proposing. I think it's invasive. I think privacy for individuals is getting ignored. And I think treating the American people like they are subjects of the government is unconscionable.
Well, Senator Loomis, I really disagree with the assessment that you have, and I think you misunderstand the proposal. Banks already report directly to the IRS the interest that they pay on accounts when it exceeds $10. And this is not a proposal to provide detailed transaction level data by banks to the IRS. It is a proposal to add 2 additional pieces of easily ascertained information on to the 1099 INT form that banks already file, namely the aggregate inflows into the account during the year and the aggregate outflows. And I think it's important to recognize that we have a tax gap that's estimated at $7 trillion over the next decade. That is taxes that are due and are not being paid to the government, that deprive us of the resources we need to do critical investments to make America more productive and competitive. And the reason that that tax gap in part exists, partly it's because the IRS has been deprived of revenue to hire auditors, but the IRS has a wealth of information about individuals. If you work at a job where you get labor income, a W-2 is filed and sent. There are dividend payments and transactions payments that are sent to the government. But there are a class of partnerships, businesses, high-income individuals who have opaque sources of income that the IRS doesn't have direct information about. And that's where the tax gap is, not low-income people. And
well,
this additional information would help.
$600 threshold is not usually where you're going to find the massive amount of tax revenue you think Americans are cheating you out of.
That's correct, but it's important to have comprehensive information so that individuals can't game the system and have multiple accounts.
Mr. Chairman, I yield back.
The senator from Massachusetts, Senator Warren, is recognized.
Thank you, Mr. Chair. Thank you both for being here today. Chair Powell, during your time as chair, you've taken plenty of actions to weaken the Fed's regulatory oversight of our largest banks. So today I want to talk about 3 instances of that and ask you to think about them in hindsight. First, the stress test. Now, these are designed to tell whether or not big banks can survive without a taxpayer bailout. When the tests were first set up, bank supervisors could restrict stock buybacks and dividend payments to strengthen the bank's balance sheet. In 2019, you took that power away. And we now know from the Fed's own research that when the economy hit choppy waters last year, those banks needed stimulus from the taxpayers, and that without this taxpayer help, they would have faced up to $300 billion in losses, meaning that they were in a sharply weakened position to withstand the stress. Chair Powell, do you regret weakening the stress test?
I don't think we have weakened the stress test, and I'm not sure what you're referring to. When banks fail the stress test, their distributions are limited.
So I laid it out here that you took away the power to restrict stock buybacks and dividend payments that could be used to strengthen the balance sheet. You don't see any changes you made to the stress tests and handing the stress tests out in advance?
Capital in the largest banks is at multi-decade highs.
That's not my question. I'm looking at the Fed's own research, which says that without the help that you had to put into the economy last year, they would have faced up to $300 billion in losses. So look, I don't want to argue with you about what
which they would have been able to absorb without difficulty.
Let me ask you the question then. I take it you don't have any regrets about any changes to the stress test?
Not really. I mean, I'm prepared to look at anything we did is fair game to look at again, but I don't think so.
Let me ask about another action. In 2020, the Fed, along with the other agencies, removed the Volcker Rule restrictions on whether banks could co-sponsor so-called family funds. And then earlier this year, we watched the collapse of a quote-unquote family fund called Archegos, which caused banks to suffer a quick $10 billion in losses. Given the Archegos collapse, do you regret weakening the Volcker Rule?
That's actually a family office at Archegos is. I don't know that there are any Volcker Rule implications for Archegos. I will say we've looked at the Archegos situation closely. Those losses were, and I think learned our lessons from that.
Learned your lessons, but do you have any regrets about weakening the Volcker Rule around family funds, having watched what Archegos did?
I'd have to understand the Archegos connection. Generally, it was widely agreed that the Volcker Rule, as implemented, was complex and not workable.
Okay.
And
so
we took a
I'll
fresh
take
look.
That as a no. I just want to make sure I can get through all three of these. One last example. In 2019, the Fed weakened liquidity requirements, the rules that ensure that firms have adequate cash to meet their obligations. For banks between $250 and $700 billion in assets, the liquidity requirement was cut by 15%. So let me just ask, do you regret slashing liquidity requirements designed to protect markets from crashing like they did in 2008?
So that was tailoring, which the law that had been passed through this committee required. I don't see that there has been any evidence that was a bad idea, but it's one that could certainly be looked at again.
Okay, so you'd be willing to at least look at that
Yes.
one again. Okay, this cut by 15%. Chair Powell, the elephant in the room is whether you're going to be renominated for a second term as Fed chair. Renominating you means gambling that for the next 5 years, a Republican majority at the Federal Reserve with a Republican chair who has regularly voted to deregulate Wall Street won't drive this economy over a financial cliff again. And with so many qualified candidates for this job, I just don't think that's a risk worth taking. I know that some argue that your deregulatory actions are mostly harmless. I disagree. I think they've put taxpayers at risk for hundreds of billions of dollars. But even at that, so far you've been lucky. But the 2008 crash shows what happens when the luck runs out. The seeds of the 2008 crash were planted years in advance by major regulators like the Federal Reserve that refused to rein in big banks. I came to Washington after the 2008 crash to make sure that nothing like that would ever happen again. Your record gives me grave concern. Over and over, you have acted to make our banking system less safe, and that makes you a dangerous man to head up the Fed, and it's why I will oppose your renomination. Thank you,
Wow.
Mr. Chair.
Wow.
Senator
Ouch.
Rounds from South Dakota is recognized.
Thank you, Mr. Chairman. Well, needless to say, Chairman Powell, I would probably disagree with my colleague, and I commend you for the hard work that you have done. And I
Nice.
most certainly think that you do deserve to be renominated to the position that you have right now. And I look forward to working with you for the next several years. Chairman Powell, I would like to ask you about the supplementary leverage ratio, the SLR exclusion that the Fed and the other banking regulators instituted during the pandemic that allowed banks to exclude ultra-safe assets, including U.S. treasuries and deposits to the Fed, from their balance sheets. This exclusion allowed the banks to take in the extraordinary amount of deposits that we saw during the pandemic without having to grapple with needless capital requirements. I'm just curious whether or not you believe that that move was successful, and whether or not you would see any possibilities of perhaps a continuation of that in the future.
So it was important that we did it in the crisis, and it worked. I think it's less binding now because of all the money that's now at the reverse repo facility. Ultimately, we don't want leverage ratios to be the binding constraint on banks because we think that gives them the incentive to take more risk. I would say we would need to be very careful with the supplemental leverage ratio because we want to make sure that any changes we make to it will not reduce the overall bindingness of the capital requirements for the largest institutions. But it is something we would look at modifying, and it's one of the things we're looking at right now.
Presumably you felt that you received pretty positive feedback from the institutions that were impacted by this particular modification of the rule.
Yes, but that was an emergency situation. When the emergency ended, we allowed that provision to lapse. But I think overall, though, with all the liquidity in the system, it could again become the binding constraint, and that would not be good from a safety and soundness standpoint.
Thank you. Secretary Yellen, welcome. It's good to see you again. I'd like to direct this question to you. During our last quarterly CARES hearing, I inquired about the severe backlog of tax returns facing the IRS, as approximately 2.4 million tax returns remained untouched by the IRS at that time, many of which were from 2019. That number only continued to grow with an approximate 35 million backlog tax returns at the end of June when the National Taxpayer Advocate released the mid-year report to Congress. When I originally asked about the IRS's possible plan to address the backlog, you responded that you had not yet had a discussion with the IRS commissioner about this particular issue, but you did provide assurances that you would work with me and my office and remain committed to developing a plan to address the backlog. After receiving no correspondence following the hearing, I sent a letter to you asking these same questions, to which I have also not yet received a response. So my question, Secretary Yellen, I'm asking for a third time. Have you discussed the IRS's plan to address its immense backlog of tax returns with the IRS commissioner? And if so, what's the plan?
We have discussed this with the IRS commissioner, and he is addressing it, and I'd be happy to get you more details. My apologies if we haven't responded in a timely way. I promise to do so quickly.
So it would be fair to say that the IRS does have a plan in place to prevent this level of backlog in the future?
We are trying to add to the IRS's resources so that they will be able to handle these things in a more expedited fashion.
So we can perhaps expect a communication from your office here in the next 5 days or so?
We will try to get you that communication.
Thank you. Also, Secretary Yellen, with the Treasury quickly approaching the debt limit, and I know that this is something which you've identified and have expressed concern over, It makes one question when America might become the next Greece. When, in your view, when do we have to say enough is enough when it comes to our deficit and our debt?
So one, in thinking about what is a reasonable level of debt, there are a number of different metrics that one might look at. Commonly, debt to GDP ratios are a measure that's widely used. Ours is a little bit over 100%, which
Debt to payments
traditionally has been regarded as high. But we are in a very low interest rate environment. That's been true for a very long time and is likely to be true going forward. And an alternative, and I think better measure of fiscal sustainability is to look at the real net interest cost of the debt. What is it in real terms costing to service the outstanding debt? And for the last several years, that's been negative. And even if interest rates, 10-year rates and the Treasury yields revert in future years back up to more normal levels, the interest cost, which really is the burden, is projected to remain low. The plans that the Biden administration has put forth would keep that low at under 1% of GDP.
Thank you. My time has expired. Thank you, Mr. Chairman.
Senators, thank you, Senator Round. Senator Smith of Minnesota is recognized.
Thank you, Mr. Chair, and welcome to Secretary Yellen and to Chair Powell. I'm going to direct my questions to Secretary Yellen today, and I'd like to start with the question of emergency rental assistance. So I think we have all seen that the pandemic has not been a great equalizer. It has laid bare the deep inequities in our society, particularly, I would argue, in housing. With COVID, we're all in the same storm, but we're not all in the same boat. What this looks like in Minnesota is the following. There are about 60,000 families in Minnesota that are behind on rent. And to support those families, we all worked hard here in Congress to get them emergency rental assistance.
True.
So far, however, only about 15,000 families have received help through Minnesota's emergency rental assistance program, and that's not nearly good enough. And this is particularly troubling because about 2/3 of these families are families of color and indigenous families. So if this program isn't working, it's disproportionately hurting them. So Secretary Yellen, here's my question. I appreciate that Treasury has worked hard to clear away the red tape at the federal level to make this program work better. And I appreciate that this is being run at the state level and often also at the local level. What can you tell us about what you are doing to make sure that renters aren't hurt as Treasury approaches this recapturing of emergency rental assistance funds?
Well, we want to make sure that renters are helped. And we've been, as you noted, working hard to provide the support to state and local governments to put in place effective programs. But the ERA-1 statute requires Treasury to begin reallocating excess funds that will be required as of September 30th. And Treasury is developing a procedure to govern that process. We want to make sure that localities with demonstrated need receive additional funds and that they come from places that are not running effective programs or have less need. And we will be looking at reallocation in order to improve the effectiveness of the program.
Get the money out faster. Come on.
30,000 applications remain to be processed, which is a sign, I think, of the great need in our state. Can Treasury approach this looking at these large backlogs of applications that are remaining to be processed, that are, in other words, sort of, in the system right now as you're working on this?
I mean, we will look at backlogs. We will look at the effectiveness with which states and local governments have gotten out the rental assistance that they have. We want to see before additional funds are made available, that the ones that are available have been allocated effectively. But if that's true and there's clearly additional need, then
By the way, VIX continues to rise. Crypto's falling more, stocks falling more.
Appreciated in your opening statement that you talked about the mammoth task of standing up an infrastructure at the state and local level in order to distribute this rental assistance. And as you move forward with this following the law, we need to make sure that the folks that are really needing the help aren't the ones that are getting penalized because of slower than we would have liked implementation of this program. So I appreciate your comments, and I look forward to continuing to work with you on this as well.
very good, we do as well.
I just have about a minute left, and I want to just touch briefly on the question of childcare. We know that childcare is a family and an economic imperative, and I'm really grateful to the work that you have been doing. I appreciated very much the Treasury's recent report on the childcare supply challenge and the great difficulties we have here. Secretary Yellen, Minnesota childcare providers tell me that they are really struggling to find and keep workers. They're painfully aware that they are not able to pay their workers as much as they are worth, and as a result, many people, there's high turnover in the sector. Now, when most businesses encounter challenges in hiring, they raise wages to attract people, but of course that's not. Could you just explain to everybody why that is not a feasible option for folks that are trying to make this system work in the childcare sector?
Well, in many ways, this is a market, and this is what the Treasury report showed, that just doesn't work. That parents, when they most need childcare, are unable to borrow in order to cover it. And so they're struggling with very high childcare expenses at a moment in their lifetime when they can often simply not afford it. And that puts the childcare providers in a situation where they just can't afford to pay wages that are living wages. And in fact, a substantial fraction of childcare workers receive some additional social support because the wages are so low. And we really need to fix that. It's a broken market, and there are huge gains to society for making sure that children have quality childcare, and it influences the course of their success over their whole lives.
Well, thank you for that. And Mr. Chair, I know we're out of time, but we have a solution to this problem that is included in the Build Back Better plan that President Biden has proposed and that we've been working on in the Senate and the House. And I look forward to getting that solution passed in the law to address these systemic problems in childcare. Thank you.
Thank you, Senator Smith. Senator Scott of South Carolina is recognized.
Thank you, Mr. Chairman. Thank you, member. Thank you to both witnesses for being here this morning. Good morning. You all have difficult challenges that we all face as a nation, and look like they're getting more difficult, not less difficult. Democrats control the White House, the Senate, the House. They have the votes to raise the debt ceiling. Unfortunately, they also have the votes to fundamentally weaken the greatest economic engine in world history. What they do not have the votes to do is to force Republicans to be complicit with their reckless spending spree. Killing the goose that lays the golden eggs isn't just bad for the goose. It's bad for everyone who depends on the eggs as well. There is nothing compassionate about spending money we don't have on new benefits we can't afford, all the while discouraging work and increasing the likelihood of a future default when the yet-to-be-born American receives the bill for benefits she didn't experience and are no longer available. It's also important to note that our labor force participation rate is down, not up, even with the new programs and the payouts that I heard this morning during this hearing that somehow is supposedly increasing our labor force participation, when in fact it's apparent and clear to Americans that's not the case. Chair Powell?
He's probably referring to like the child tax credit and things like that.
Maybe neither one of us knows, as well as the folks working paycheck to paycheck around this nation, or the seniors depending on their Social Security checks to make their ends meet, that inflation is having a devastating impact on people on fixed income people working paycheck to paycheck. I think about the fact that gas prices are over 40% as a nation. And frankly, over the last few days, we've seen signs that it's going to only get worse, not better. The gas prices are going up over $3 a gallon in so many parts of this country, and frankly, even higher in other parts. The fact that food, whether it's bacon or fish, meat, all are up double digits. Can you point to any specific policies put in place by the current administration that may be exacerbating the runaway rise in food and energy prices in recent months?
Senator, that wouldn't be for me to do, but I think those things are, I wouldn't be identifying policies of the current administration.
Would you agree that the fact is that when we have limited supply and an increasing demand, that a $1.9 trillion COVID relief that spent less than 1% on vaccines and 9% on COVID-related health only adds more pressure on our markets, and that pressure results in higher inflation?
Senator, we have some really difficult and important jobs, but one of them is not commenting on fiscal policy. I'm sorry to say, with respect.
I do think that it does include inflation and employment. Are those two major aspects of being the chairman of the?
Those are the two major aspects.
Indeed. And so when you see policies that are put in place that has not increased our labor force participation, but decreased our labor force participation rates, and you see policies that are actually designed, so I heard earlier this morning, to put people back at work, in fact, that number is going down. You see that the impact of the inflationary, what I thought was transitory, that's what we heard earlier this year when I asked you all both the question about inflation in this country. Seems to me that we're heading in the wrong direction. Let me ask Secretary Yellen, the face of spiking inflation, slowing growth, lingering high unemployment, and historic levels of government spending and government debt, how do we justify supporting President Biden's $3.5 trillion tax spend package?
Well, first of all, the package is paid for. So
how is it paid for, ma'am?
There are increases in taxation on corporations
May I ask you a question?
and high-income individuals.
Let me ask you a question on that while I have you here. Do you think that taking the cap gains tax from 23.8% to 43.8% will encourage more investment in our economy or less investment in our economy? Do you think that taking the corporate tax from 21% to 28% will actually, we both recognize that corporations, they may write the check, but the people who pay the tax are the consumers and the employees with fewer wages, fewer increases in wages and lower benefits. How do we think that these higher taxes are going to lead to more opportunities in our marketplace?
Well,
fair question.
First of all, I think that the likely impact on investment spending is very small. And I think in 2017, when taxes were cut substantially, you did not see any surge in investment spending. Instead, what you saw was a surge in stock buybacks. So the linkage between investment spending and the corporate tax rate is really very modest. Mainly, it falls on excess profits.
Yes.
So I think the Biden package, the Build Back Better package, will improve corporate competitiveness because it's going to invest in critical infrastructure in our economy.
Secretary Yellen, I don't want to cut you off, but I have no choice because Chairman Brown is going to cut me off. So before I lose my time here, and thank you, Chairman, for.
You already have lost your time, but proceed, Senator Scott.
You are patient, Chairman, and I appreciate that more than I can say. I'm so glad that you brought up the 2017 tax reform package that we worked so hard on. Bottom line is, I would say that someone who watches the market, I know you watch it very closely. The fact is that in 2018 and 2019, we saw more revenue to the government, not fewer dollars to the government. And to think that taking the corporate tax from 21 to 28% is somehow going to make us more competitive against our OECD competitors. I know that you have a strategy to raise our guilty and make us more competitive somehow by having other countries agree to higher taxes. I'll just say that the proof will be in the pudding, and maybe you and I will be here in a couple of years to have a conversation about the results of the tax increase that will make us less competitive, not more competitive. But thank you for your graciousness. Thank you, Mr. Chairman.
Allen of Maryland is recognized.
Thank you, Mr. Chairman. Thank both of you for your service. And Madam Secretary, just to pick up on that last thread, because we've heard it throughout this morning, our Republican colleagues trying to have it both ways. On the one hand, they beat up on our proposals to reform the corporate tax code, to make it more fair, to make sure that every multinational corporation pays its fair share, that they can't park their profits in the Cayman Islands and other places. And then on the other hand, they say, oh, this reconciliation bill is going to add to the deficit, and they tie it into this debt ceiling debate. Let's just be very clear. The Build Back Better agenda that President Biden has proposed would pay for itself through some of the tax reform measures you mentioned, right?
Yes, absolutely. It will pay for itself.
Which is very different than the 2017 Trump tax giveaway to big corporations that didn't have a penny to pay for it. Isn't that correct?
That's correct. It was resulted in very large increases in deficits, and the Biden package will not. And over beyond a 10-year horizon, it will improve tax collections and reduce deficits substantially.
And let's now talk about one of the tax cuts we want to extend, right? Which is the tax cut for middle income and lower income families with kids. We estimate that this year that cut child poverty in half in the United States, right?
Yes, the child tax credit and other features.
But that expires at the end of the year, does it not?
It does, and we think it's important to extend it. It's really critical support to families that are trying to raise children. And we've already seen in 3 months of distributing these child tax payments, spending on food that's reduced, food insecurity, on apparel, and on children and their well-being. It makes a huge difference.
Right. So let's just be clear. We're hearing Republicans this morning beat up on us for closing big loopholes in the corporate tax cut, in part to pay for an extension of tax cuts for middle income families with kids,
That's right.
which cut child poverty in half this year. And I guess their position is, well, let's just let it lapse, and then we can have child poverty double in the years to come. Madam Secretary, I have a series of questions. Some of them I'm going to put you for the record on the issue you raised with respect to the emergency rental assistance. And I share your concern that this money hasn't gotten where it's needed quickly enough. And I appreciate some of the measures you've taken recently to allow renters to self-certify income and financial hardship. I hope you will also make it clear that with the appropriate safeguards, landlords can submit applications in bulk on behalf of tenants, and we'll be following up with you on that. Also, I heard you responding to Senator Smith. Can you give us assurances that as we reallocate some of these funds, and I understand why you want, that we're not going to harm the very people we wanted to help simply because their local government couldn't get the funds out as quickly as some others?
We will certainly try to avoid that. We're aware of that possibility, and we will try to reallocate, for example, within states, so that individuals who aren't being helped locally will have access.
Right. I'm also going to follow up with you on, in Baltimore City's case, you have said, the Treasury has said that they can use their funds to try to bring back tourism, which is a good thing.
Yes.
But they can't use their funds to try to bring back families who may have left Baltimore City during this pandemic to live in other places, even though bringing them back would not just be a one-time tourist investment in the city, but a long-term investment. I will follow up with you on that.
Be happy to do so.
Chairman Powell, you've spoken to it generally, but you heard Secretary Yellen's assessment of what the impact on our economy would be if we didn't left the debt ceiling and defaulted. Do you agree with the assessment she's provided here this morning, that it would be devastating, and all the other pieces?
Yes, I do. I think it's essential to raise the debt ceiling in time to avoid payment defaults of any kind. The potential effects could be severe.
Right. And just to be very clear, isn't it the case, Secretary Yellen, that about 28% of our total debt right now was incurred during the 4 years of the Trump administration?
I believe that's right. I think about $8 trillion.
Right. And I suspect almost every Republican member of this committee voted for the measures during those 4 years, including that big tax giveaway. And I would just point out, I heard Senator Kennedy earlier this morning talk about how, let Democrats do it alone. We would like our Republican colleagues to do the right thing, but we are willing to do it alone. In fact, Senator Schumer just announced that later today, he'll go to the floor of the Senate and say, just let the Democrats with 50 votes and the vice president lift the debt ceiling. He's going to ask unanimous consent to do that. We could do that today. I know Senator Kennedy's not here anymore, but that would get it done. And while we'd like our Senate Republican colleagues to do the right thing for the country, we are willing to do it alone if they just let us and get out of the way. Thank you, Mr. Chairman.
Thanks, Senator Van Hollen. Senator Daines from Montana is recognized.
Chairman Brown, thank you. And thank you, Secretary Yellen and then Chairman Powell for being here today. I want to start by expressing my continued concern with the inflation we're seeing in the economy. Real wages are down as a result of inflation. I'm deeply concerned that supply chain issues that we're seeing will not be quickly resolved. Add to that the reckless $3.5 trillion tax and spending spree. Let's be clear, it's the largest tax increase in 50 years. It's the largest spending bill in the nation's history. These are, you have to have superlatives when you start talking about what's being proposed right now in Washington. I fear inflation will persist. And the reduction in wages that workers are seeing as a result might indeed accelerate. This package would affect and kill hundreds of thousands of jobs, hurt economic growth in my home state of Montana, as well as across the country. Turn to my questions. Secretary Yellen, yesterday I sent a bipartisan letter with 8 of my colleagues urging Treasury to ensure that water storage projects like those on it's called the St. Mary's Milk River system are eligible for water infrastructure ARPA funding. Would you commit to working with me and my team and some of the other senators on both sides of the aisle to ensure these critical water infrastructure needs would be addressed?
Certainly. I mean, I'm not knowledgeable.
I wouldn't
about
expect you to know the details of that,
here,
right?
but
Yeah,
we'll certainly work
I want to
with
raise
you
your
on that.
attention. So
Absolutely.
thank you, Secretary Yellen.
We will definitely do so.
Much appreciated. Turning now to the topic of energy, Secretary Yellen, I'd like to get your thoughts on what's happening in Europe right now. The UK in particular is increasingly reliant on renewable power generation. And right now, the wind simply isn't blowing and they aren't able to get enough natural gas to meet demand. This has led to massive spikes in the cost of power. In fact, power prices for next day delivery in the UK are 10 times higher than the average price just 1 year ago. In the US, we're very fortunate. We've moved from being a net importer of energy to now a net exporter. I think it's provided incredible competitive advantage for us, national security implications by reducing reliance on other countries for energy. We're able to do this because the U.S. has a very diverse mix of energy production, natural gas, hydro, coal, wind, solar, nuclear, many other sources. However, I'm deeply concerned with the Biden administration's policies to curtail reliable baseload power that comes from coal, oil, gas, and would send us back to where we perhaps were back in the 70s and to where Europe seems to be headed today. Secretary Yellen, could you help us explain how the Biden administration's tax hikes and grand aim to really shut down fossil fuel production would not lead us to the same path of dependence on hostile adversaries, for example, Russia, where much of Europe now is faced with today?
Well, President Biden, and I feel the same way too, believe that climate change is an existential threat that absolutely must be addressed. And he's proposed a clean electricity plan that would, by 2035, shift entirely the electricity sector to reliance on renewables. And of course, with renewables, as you pointed out, in the case of the UK, there's a question of what to do if the sun isn't out and the wind doesn't blow. And I believe there are storage technologies that can be deployed and other means to address that. And of course, that has to be part of a plan to switch to renewables and address climate change.
Yeah, one of our concerns, of course, is Of course, the technical challenge here on intermittent sources of energy, as you described, and storage, but the impact this will have on families that are on fixed incomes, or seniors, or lower income families. You see these massive spikes in energy costs.
Well, that's certainly something we would want to avoid. And I don't believe that the president's program is going to lead to increases in the cost of energy.
And I
for the
respect that point of
typical
view.
family.
I'm sure when the Europeans launched on this path, they weren't planning to have order of magnitude increases in prices either, but it has been a consequence of the policies. Chairman Powell, earlier this month, in response to revelations about securities trading by presidents of Fed regional banks, you began a review of the ethics and transparency rules across the Fed because, and I quote, "The trust of the American people is essential for the Federal Reserve to effectively carry out our important mission. The Fed Board of Governors is subject to FOIA and the Federal Records Act, but the Fed regional banks currently are not. Would you support making Fed regional banks subject to FOIA and the Federal Records Act to ensure greater public transparency and trust in the Fed?"
Senator, that's a good question. I'd like the chance to think about it and come back to you. I would want to reflect on that and on the reasons why they're not subject to it, and I will do that.
I appreciate that, Chairman Powell. If there's something, and Mr. Chairman, I'll wrap up here the statement. If there's something that concerns, I think, many of us, is the loss of trust of the American people in their government. And here you have one more example. I appreciate your leadership and thanks for consideration of that request.
Thank you.
Senator from Georgia, Senator Ossoff, is recognized.
Thank you, Mr. Chairman, and thank you to our guests. Mr. Chairman, a question I've asked you in several consecutive hearings. The COVID-19 pandemic, of course, the most significant shock to the U.S. and global economy in the last 2 years. Beyond COVID, what do you assess are the most significant systemic risks or threats to financial stability in the U.S. and globally?
When I think about systemic risks to the financial system,
That's a good
I
question.
always think about cyber risks really more than anything else. We have a very highly capitalized banking system, one that is much better at measuring its risks. So the more traditional making bad loans, losing money and things like that, that'll happen. But the banks are really well fortified against that. The risk that we haven't really faced the full brunt of yet is a successful cyber attack on a financial institution of some kind, be it a financial market utility or a bank or another financial institution. And, you know, we work closely with Treasury and other agencies all around the country on that. You never have the feeling you're doing enough, but it's a very high priority to be ready for it. But that would be the number one thing.
Madam Secretary, the same question for you, please. Other than the ongoing COVID-19 pandemic and the terrible economic toll that it's taking and the terrible health toll that it's taking, looking more broadly, what do you assess to be the most significant systemic risks or threats to financial stability?
I think there are threats to financial stability that have come from the growth of activity in the shadow banking sector. We saw some of those threats emerge during the onset of the pandemic. We have, for example, open-end bond funds that guarantee daily redemption, saw massive withdrawals by individuals who wanted to flee to cash, and that can trigger fire sales of assets with systemic consequences. The Financial Stability Oversight Council that I head has taken that up as a topic that we're looking at and examining. There are issues relating to hedge funds and the possibility of leverage there that can trigger financial runs. That's another topic. And more broadly, climate change over time is, I believe, could be a significant risk to the financial sector and the economy. And FSOC is also doing work on that to assess, evaluate, coordinate regulators, work with them to make sure they have the data that they need, and that we develop the methodologies to examine that risk.
Thank you, Madam Secretary. Mr. Chairman, you noted in your testimony the impact of supply chain bottlenecks on prices. Can you give a sense to what extent you assess that difficulties in the shipping markets and in port operations are driving those bottlenecks and contributing to high price levels in some sectors?
It's certainly one of the major factors. We're told by our contacts that retailers, for example, that are trying to buy products for the holiday season can't get the product. If they can get the product, they can't get a container. If they can get the container, they can't get a ship. If they can get the ship, it's at anchor outside of the port of Los Angeles. So transportation is a big issue. Really, our supply chains have gotten all tangled up and blocked up. Big part of it.
Thank you, Mr. Chairman, and Mr. Chairman and Madam Secretary. As you know, Georgia hosts the Port of Savannah, which is the fastest growing deep water port in the United States. It hosts the largest single container terminal in the United States. We have additional capacity at the Port of Savannah. Broadly speaking, have you been in any meetings, principals meetings or National Economic Council meetings or discussions at a high level about surging governmental resources and ingenuity to solve these shipping bottlenecks? When I reflect upon the capacity, for example, that our Department of Defense has to project power and mobilize resources and execute complex logistics around the world, I can't help but wonder whether with a more hands-on and targeted approach, we could resolve some of these issues at major U.S. ports and in the shipping industry.
The National Economic Council is looking closely at this issue. They've hired someone who has extensive experience with logistics and supply chains to take a very careful look and to see what we can do to try to untangle these supply chains.
Thank you. Any recommendations to Congress would be appreciated. And if perhaps if there's some emergency legislative measure that would allow us to tackle this problem, which is contributing to price instability and price increases, let's follow up directly about opportunities to work together. Thank you, Mr. Chairman. I yield.
Senator Tillis is recognized from his office remote.
Thank you, Mr. Chairman, Secretary Yellen, and Chair Powell. Thank you for being here. Chair Powell, the Administrative Procedure Act requires federal agencies, including the Federal Reserve, to follow well-established rules when issuing proposed and final regulations. I believe the Fed issues far too much guidance that's generally applicable to all banks, which should instead be subject to thoughtful and transparent notice and comment. I believe former board member Torello has suggested that certain federal actions are exempt from the APA, and I think specifically noting CCAR, the Comprehensive Capital and Analysis Review. In my conversations with Vice Chair Quarles, he's made it abundantly clear that he believes the Fed does, in fact, have to abide by the APA in all circumstances. So, Chair Powell, who's right? Does Torello have a leg to stand on in terms of saying that the Fed is not subject to the APA in all circumstances? Or is Vice Chair Quarles right that you are?
Senator Tillis, I will speak to you to this issue under the control of my general counsel who's here. But my understanding is that the APA does apply to the board and that we take care to observe its requirements. I know that our stress testing and capital plan rules were promulgated in compliance with the APA.
So I guess with legal counsel in the room, I've got a half answer.
Yeah.
Well, I've given you what I know. I'd be happy to follow up with you separately on this.
I feel very strongly about it. We'll come back to that. I did want to ask you another question, Chair Powell. In minutes from the FOMC conference call on October the 13th, you advocated for, October 2013. You advocated for not disclosing contingency plans you had made for a potential breach of the debt ceiling, saying it would, and quote from the minutes, make it less likely that the Congress will feel enough pressure to actually raise the ceiling, end quote. Do you think it's the role of the Federal Reserve to decide to withhold such information? And what other instances, if you do believe that, and what other instances have you deemed it important not to attempt, not important enough to not influence congressional outcomes?
No, I actually, if you look at that transcript, what I said was, and what I meant was, the things that we will do that are within our power to do, I think are very well understood by market participants. There was a long list of things discussed at that meeting, and as you get down the list, these were things that we really would not like to do, and probably wouldn't do, but really in a national emergency, we'd have to think about doing. So I was talking about those sorts of things, and I thought putting those out there and having people believe that we would do these things was really not a good idea, and that it might create a misunderstanding on the part of the public that we actually could shield the financial markets and the economy and the American people from a default on the debt ceiling, on our debt, and that is not the case.
Secretary Yellen and Chair Powell, I know you both made comments endorsing the federal legislative solution to provide a replacement framework for outstanding financial contracts tied to LIBOR. I agree completely, and I was pleased to see the legislation clear the House Financial Services Committee last week on a strong bipartisan basis. Just want to let you know that we understand that bipartisan action is needed in the Senate to effect a smooth transition and to provide certainty to capital markets. And I look forward to working with my colleagues, first among them, Senator Tester, to make sure that Congress does act and provide for a smooth transition. Thank you, Mr. Chairman. I yield back.
Thank you, Senator Tillis. Senator Cortez Masto.
Thank you. Thank you both for being here. It has been at times loud, exciting hearing this morning, and I appreciate your patience, and you're still there willing to ask questions, and I think it says a lot about both of you. But let me just put something, because at the end of the day, at least for the people in my state, it is about the truth and the facts and people working together and what is happening in this country during this pandemic. So let me just verify, because Congress passed the CARES Act, the American Rescue Plan, and an appropriations bill with significant resources for healthcare, for housing, and support for local governments. And they did this because we were in the middle of a worldwide health pandemic due to COVID-19. Isn't that correct? Yes, for both of you, both shaking your heads, yes?
Yes.
Yes. So let me, how important were those investments to avoid a deep and painful recession? Were they important to avoid that recession? Is that?
Absolutely.
Utterly essential.
Okay. And I appreciate that, because at the end of the day, there was bipartisan work to address this pandemic, and it was needed at that time. The work that we are doing to increase the debt limit has a lot to do with that debt that was incurred back then to address the pandemic. Isn't that right?
That's true. Raising the debt limit allows us to pay bills that were incurred because of those acts and others of Congress.
So just so I can clarify, so my colleagues who are refusing to come to the table to address this, they are getting the benefit of that relief in their states, however, correct?
Yes, of course.
All right. Just to clarify that. Now, I do know, though, coming from Nevada, and Chairman Powell, you and I have had this conversation, Secretary Yellen, you as well, there's still an industry that was so hard hit that it's still trying to recover from this pandemic, which is that hospitality, that travel and tourism industry. Isn't that correct?
It's still deeply depressed, hasn't come back to normal yet.
That's right. And so, Chairman Powell, can I ask you your thoughts on what we should continue to do to address to help the recovery? Because I know, at least in Nevada, which the main revenue generator for our state is this hospitality, travel, and tourism, that leisure traveler has been there, but the business traveler's not back, the international traveler's not back. Are you anticipating what can be done by the Federal Reserve to address this? And Secretary Yellen, I'll ask you the same thing, by the administration, or what should we be doing as Congress? Have we done enough for this industry, or does more need to be done to help bring it back because of this pandemic?
In my view, the most important thing is to get control of the pandemic. That's what's keeping people out of sporting arenas and off of airplanes and out of restaurants and bars. And we saw that very clearly in the August payroll report, where job creation in these industries had gone from very strong for several months to zero in August. So it's really all about, at this point, getting the Delta variant and really, frankly, getting vaccination and immunity up higher, which is not something we can do.
Thank you. Secretary?
And would agree with that answer, and it is something we are working as hard as we possibly can to do, to get vaccination rates up, to deal with the pandemic.
Thank you. And let me talk about something that's also impacting my state, and I think many, which is the disruption in the supply chain. And Senator Ossoff was talking to you about it, Secretary Yellen. And you talked about the National Council, if I remember correctly.
National Economic Council.
Yes. Is there a time frame when they anticipate coming back with some kind of concrete answers to how to address this disruption in the supply chain?
I can get information for you on that. I know they're bringing together business leaders who are in affected industries with experts to see if things can be worked out.
Thank you. I appreciate that.
So, in other words, not sure yet when the supply chain issues are going to get better.
The rest of my questions for the record, but thank you both for being here.
Thank you.
Thank you, Senator.
Senator Haggerty.
Thank you, Ranking Member Toomey, and thanks to the members of the committee for holding this hearing. I want to thank Chair Powell, Secretary Yellen for being here today. Chair Powell, I'd just like to also acknowledge you. You and I have talked extensively about my concerns about the inflation in the economy. We spoke about this in February, and we spoke about it in depth during our hearing in July. Very pleased to see the Fed beginning to lay the groundwork now to address inflation in our economy, and for that I want to thank you. Secretary Yellen, I'd like to turn my attention to you. And if we might speak about the $3.5 trillion transformation of the U.S. economy that's being proposed right now that we're going to be expected to vote upon very soon. Last week, you, Leader Schumer, Speaker Pelosi, stood before the American public and said you'd agreed to a framework to pay for this. Could you tell us what's in this framework?
Well, it was essentially a list of ideas where there's support from the House, the Senate, and the White House for how revenue could be raised that would be sufficient to cover the expense of programs under consideration. And as we've articulated, this involves increases in the corporate tax rate, a reform of international provisions that will reduce the incentives we currently have in the tax code to export jobs and export profits to low-taxed areas and to export jobs abroad and raise revenue. Additional revenue raised from high-tax, high-income individuals, well above $400,000, for example, by raising back the highest income tax rate to where it was before 2017, and will go in 2026 under current law to increase the tax rate on capital gains. And importantly, to improve tax compliance. We have a huge tax gap that's estimated at $7 trillion.
Now, I'll come to the compliance issue in just a moment. I would, though, very much like to see this framework that you agreed to. We're going to be expected to vote on the most massive transformation of the U.S. economy that this nation has ever seen. $3.5 trillion is a huge amount of money in pay-fors. And the industries and the individuals and how they're going to be targeted is something that I would very much like to get a copy of before I'm expected to vote on this. I'm certain that my fellow committee members would like to see this. Is this something that you could get to me and my team by the close of business today, Secretary?
No, it is not. There are currently discussions and negotiations taking place within the House and the Senate with involvement in the White House to try to decide what a final package will look like. And until that's decided, you can see that things coming out of House Ways and Means, for example, but this is very much in the process of being
This is
decided.
very, very, very disturbing when we're talking about something of this magnitude and you're telling me that I cannot see the framework, that the members of this committee cannot see the framework. I guess we're just supposed to trust the administration.
Well, you can look at our proposals that the president put out in conjunction with his Build Back Better plan.
These are just platitudes. I'm talking about the specifics of the program.
Well, the Treasury's Green Book had specifics of our proposals, and House Ways and Means marked up a bill pertaining to revenue that you can look at the specifics.
I'll look
there
forward
as
to you
well.
working with my staff so we can have a detailed understanding, because the last thing I want to do is find ourselves yet again in a situation where we've got to pass a bill to find out what's in it. And in fact, we need to have a very clear understanding of this sort of transformation, because the credibility of this administration has been seriously challenged. If you look at the disaster that's taking place in Afghanistan, if you look at the disaster at our southern border, the inflation that's running rampant in our economy, I'm very concerned, and I want to have a much clearer picture of what the intended pay for will be and the impact on the economy. So I appreciate your team working with mine so we can get as much information as possible on this. Thank you. I'd like to turn to another specific area, much more specific indeed. You spoke about this with Senator Lummis, and that has to do with the new requirement that our banking system now report transactions that exceed $600. That's going to be an impact on community banks, on farm credit lenders. It will be an extensive compliance burden. But there's a greater concern that I have. And that's the concern that my constituents have raised with me and that the American public has in the ability to keep this information confidential. And after we've seen what happened when the IRS disclosed the private confidential tax information of its political enemies during this administration to ProPublica, there's a huge concern and a deserved concern on the part of the American public that this information, the detail that we're talking about, is a detail level that I would expect from the Chinese Communist Party, not here in America, but the detail will be protected. And can you tell me what you're going to do to make certain that this taxpayer confidential information will be protected?
Protecting taxpayer information is the highest priority of the Internal Revenue Service. The ProPublica information represented in a legal revelation of taxpayer information. It's an illegal act, and it is being investigated thoroughly by independent entities, law enforcement, and the Inspector Generals of Treasury and the IRS, and there really can't be tolerance for that. We are proposing to invest in the IRS so that they can modernize their systems and put in place better controls that will protect taxpayer information. Just to be clear, we do not know that the ProPublica information came from the IRS. That hasn't been established. And we're talking about a small amount of information, not every transaction that's less than $600, where, look, banks already report to the IRS on Form 1099-R.
I'm aware of that.
The amount of interest, and we're just asking for 2 additional pieces of information: aggregate inflows and aggregate outflows from the account during the year.
Again,
That's
far more
not
detail about it, the Americans'
Yeah.
private transactions. And again, I will say I appreciate the fact that you're looking for accountability within the IRS. We've seen a great lack of accountability in this administration. You just look at what's happened in Afghanistan, zero accountability. Look at what's happened at our border, zero accountability. The American public is concerned, and I very much appreciate the efforts that you're taking, and I hope that you get to the bottom of this so it never happens again. Thank you, Madam Secretary.
Senator Warnock from Georgia is recognized.
Thank you so much, Mr. Chairman, and thank you, Chairman Powell and Secretary Yellen, for being here. Yesterday, it was reported that the regional Federal Reserve Bank presidents in Dallas and Boston are resigning following earlier reports that they were actively trading their private investments while the bank was intervening in the markets. Throughout the COVID-19 pandemic, many experts have underscored the importance of maintaining the independence of the central bank. Independence, of course, necessary before the pandemic, after the pandemic, during the pandemic. Even though neither serves now as voting members of the Federal Open Market Committee, this is a blow to the image of the central bank, serving as an impartial and independent agency charged with maintaining stability in pricing and employment. Chairman Powell, what immediate actions have you taken to ensure the impartiality of the Fed, and what systems already are in place failed here, and how do you plan to fix them going forward?
We take our need to sustain the public's trust is the essence of our work. We want them to public to understand that we're working for all Americans, so we don't like to be having these concerns raised. It's really something that's very, very concerning. So as soon as I learned of it, I directed our staff to undertake a review of our practices. We've had in place a set of practices around investments and trading and disclosure that seems to have worked for a long time, only it's clearly, it's really not working now. And we understand now that we need to modify our practices, and we're in the process of creating ideas and recommendations for that. That's one thing that we're doing. We're also looking carefully at the trading that was done to make sure that it's in compliance with our rules and with the law.
The rules seem to have broken down. Do you think there needs to be any changes in the trade?
Yes, I'm 100% sure there is a need for those, and there will be. And I don't know precisely what they will be, but the appearance is just obviously unacceptable. And even if, as appears to be the case, these trades were in compliance with the existing rules. That just tells you the problem is that the rules and the practices and the disclosure needs to be improved, and that's what we're working on. We will rise to this moment and address this forthrightly.
I agree. Confidence in the central bank is essential, and I look forward to working with you on this issue, and also working with Chairman Brown, who's working on legislation. Let me change topics. I'm a strong advocate for working in middle-class families, and we successfully pushed to include an expansion of the Vital Child Tax Credit Program in the American Rescue Plan. I think it's really important, as some folks are talking about this $3.5 trillion package, that what we're talking about here with the child tax credit is a tax cut. And that doesn't get said often enough. I think it has something perhaps to do with a kind of attitude about working people, ordinary people, poor people. That's what it's a tax cut. And experts say that this tax cut would cut child poverty in half nationwide. And 97% of families with children qualify. So this is about lifting the burdens of our neighbors. If made permanent, this tax cut for families would push poverty in a typical year down below 10% in 47 states, including Georgia. Secretary Yellen, should Congress make this program permanent? And if so, what kind of long-term benefits will this have for our nation's economy and families?
Well, we certainly would like to find a way to make it permanent. It's a very important support for children and their families. We saw just after one payment that the share of families reporting that there wasn't enough to eat in the household dropped by 24%. And it's clear that families are spending this on their children for clothing, for food. And, you know, the security that our children have, whether they grow up insecure in families that don't have enough to provide for them.
The child tax credit is a permanent, or is what they're talking about, making a permanent sort of $300 per month for children under 18 years old, permanent, 300, I'm trying to remember. Hold on, let me get the number straight. $250 under 18 per month, $300 under 6 per month.
I think these are critical investments to make sure that families with children can support them and they can succeed in their lives.
You said they've used the money to buy things like food, I believe you said,
Yes.
clothing. What in your estimation is the impact of that on the economy, in a consumer economy? Does that help or hurt?
Well, of course, it's positive. It supports spending in the economy that creates jobs in the process.
And what would be the impact of adding mandatory work requirements if we extend this and made it permanent?
Well, we wouldn't be in favor of mandatory work requirements. The truth is that the vast majority, over 90% of families that receive this assistance are working, have workers, and you have, in addition, grandparents, for example, who are no longer in the workforce, or people who are disabled, may not be working and can't work, who are also getting support that they need to take care of children.
That's a good answer.
Thank you, Senator Warnock.
That was good.
The senator from North Dakota, Mr. Kramer, is recognized.
Thank you, Chairman Brown. Thank you, Senator Toomey. Thanks to both of you for being here. And I cannot resist. For some reason, I'm just not surprised, Madam Secretary, that working for money is something that your administration is against. I mean, part of the reason we have this no longer transitory inflation, Mr. Chairman, is because we keep giving money away like it grows on trees, and we increase the demand for products while diminishing the supply. I want to get to another point. Related, however, Secretary, you made addressing climate change a high priority in your term. It's a central point of your term. You and John Kerry, the president's climate czar, have encouraged banks and investment institutions to form this net zero banking alliance. By the way, net zero, Mr. Chairman, what that means is we're going to transfer our climate guilt to other people who don't have a climate conscience. I'd rather set a goal, a global goal, and hold the real polluters accountable rather than reducing our economy and putting us at a disadvantage. But anyway, the president's urged banks to provide as much support for alternative energy projects as possible, which of course presumes at the expense of current energy projects. And that would obviously could force financial institutions to put political and social agendas ahead of their investors and ahead of their banks, ahead of the American economy. And that's why I've been such a harsh critic of these very arbitrary ESG statements put out by banks. But in light of this weak unemployment and recovery numbers, the fact that this inflation that I never believed was transitory clearly isn't any longer, do you think it's really a good idea for private businesses to be forced by a government official to make decisions about where they should or should not put their money, jeopardizing jobs in the energy sector? Because guess what's up? Price of gasoline, price of oil, price of electricity skyrocketing. And there is no worse tax. Mr. Warnock wants to call child tax credit a tax cut, and he complains that we don't say that often enough. We don't say it because it's not a tax cut. It's a subsidy. It's a subsidy. Now, you can argue whether it's a good subsidy or a bad subsidy, but you can't. But calling it a tax cut is not fair. What we're doing is driving the price of all of these fuel sources up, transferring our climate guilt, and then hamstringing our own financial institutions with these arbitrary rules. So in the light of what's going on with unemployment, now I know you want to just tax people a whole bunch more and pay people not to work, so maybe unemployment's not a big problem, but couldn't we please rethink this strategy, Madam Secretary?
Well, look, climate change is an existential threat, and it is a very high priority of President Biden's and of mine to address it. But no one is forcing banks or other financial institutions to make investments that they don't think are profitable and desirable. There is enormous interest in the financial community in making investments that will be profitable in sustainable sustainable investments. And what we want to do, and we're working through FSOC to do this, is to make sure that investors have the kind of information that will enable them to make investment decisions that they want to make that are profitable. And
So you don't think they're capable of getting their own information at risk and opportunity? So you have to have a czar and a secretary and other czars give them information that might be helpful to their decision. All the while, by the way, Russia, Venezuela, Saudi Arabia, they get the benefit of all of this. I mean, when our president has to call on OPEC Plus to help bring the price of gasoline down by increasing production, all the while we shut off our own, whether by fiat or by innuendo, that doesn't seem like a great strategy to me. I think you're wrong. I'll yield back. Thank you, Mr. Chairman.
Thanks, Senator Kramer. As we close, Senator Toomey has some remarks, then I'll make a closing statement.
Thank you, Mr. Chairman. I just feel compelled to go back one more time and touch on this issue of the debt ceiling. I have to confess, I've been shocked to hear our Treasury Secretary and some of my colleagues tell us today that raising the debt ceiling and the additional borrowing that permits is 100% about covering spending that was committed to in the past, as though the spending that has not yet occurred this year somehow is not going to cause a deficit. Somehow that spending won't require borrowing. Spending that has not yet occurred but is going to occur absolutely is going to increase the amount that we're going to have to borrow. And when we go on an unprecedented blowout spending spree, it's going to increase spending by that much more. I mean, just think about it. Imagine that this $3.5 trillion spending bill, let's imagine Senator Sanders had his way and it was $6 trillion. We seriously think that would have no impact on the amount of money our government would have to borrow? How ridiculous. Of course it does. And so the truth of the matter is our Democratic colleagues do not want the American people to associate this huge spending binge they've been on and want to continue on with the debt that will be required in part to pay for it. And we're not in favor of either one. And that's why, Mr. Chairman, I think you're going to need to use the procedures readily available to you to raise the debt ceiling, just as you intend to pursue all this spending, which is with a simple majority vote.
Thank you, Senator Toomey. Of course, we all know that 3 years ago, 45 Democrats joined a number of Republicans with a Republican president, a Republican senator, a Republican House to pay our debts. We believed it was our patriotic duty. We all took an oath of office swearing to the obeisance there of what we believed in American values. And we paid our debts. We did it then bipartisanly, overwhelming vote. And we should do it again. And we know that Senator McConnell doesn't seem to think that. Let me get one thing straight, though, about what we've talked about. The infrastructure investments we passed in the bipartisan bill we're working on now are fully paid for. It's simple. Instead of American taxpayers racking up debt due to corporate handouts and tax cuts for wealthy CEOs, those corporations, those billionaires, for the first time are finally going to help us pay for the investment we need in our greatest asset, the American people. It's not just nurses and teachers and firefighters that are paying their taxes. It's a time that the wealthiest people in this country paid their fair share. Corporate greed's a big reason why we needed this investment in the first place. For decades, we had a corporate business model. I mentioned that in my opening statement, where they plow all their cash into stock buybacks and bonuses and other schemes where the money ends up in their pockets instead of funding the real economy. The economy of a year ago may have looked pretty good from a corporate boardroom or may have looked pretty good from the Dirksen office building. But anyone who got their, as Lincoln would say, their public opinion bass would know that so many workers, entire neighborhoods, entire towns were not seeing the gains, those stock market gains translate into opportunity for them and their family. We're changing that. One of the best things about our economy today is for the first time in decades, first time in some people's memory, workers are starting to gain a little power in our economy over their schedules, over their wages, over their benefits. They're going to gain a whole lot more power when we invest in jobs in their towns and childcare and housing and the child tax credit and education and workplace protections and everything workers need to feel stable and think, just so they know finally in this country they're getting a fair shake. I thank Secretary Yellen for joining us. Thank Chair Powell for joining us. The meeting is adjourned.
Oh.
Thanks, sir.
See ya. Okay. Time to do a summary. Oh my gosh. That was very long. We're at 3 hours and 29 minutes of this live stream. Woo! So if you have not yet gotten your free stock with public.com, go to metkevin.com/public and get your free stock worth up to $70 with public.com. All right, let's go ahead and do a breakdown here. Just give me 1 second if you don't mind. And then I will do a quick summary here. Okay. Okay. All right. This will take me 20 seconds ish, and then I should be done. And $20. There we go. Okay. Collateral, and then we're gonna do this summary. Just uno momento, please. 7, and that is 20. And that is 20. Oh, 82. Oopsies. There we go. 21K. Boom. All right. Done. Yes. Trading. Lots of trading. Got to send those alerts in the Stocks and Psychology Money group. All right, when I send them, because that's always my promise. All right. Sorry, that was fun. All right. Let's do the recap. Okay, I got everything that I need. And we will record it as if it's a new video. All right. Here we go. Hey everyone, me Kevin here. Janet Yellen and Jerome Powell of the Federal Reserve, Secretary Yellen, of course, from the Treasury Department, just spoke before Congress, testified before Congress. I covered this. I just completed a 3.5-hour live stream. And let's go through just the gist of what was said by Yellen. Then we'll talk about what Powell said. So we'll just break them down like that. So first, Yellen starts by saying it would be devastating to not raise the debt ceiling. She says the debt ceiling is really just like paying bills that we've already incurred. She says it's kind of like ordering at a restaurant. And then if we don't raise our debt ceiling, it's kind of like saying, yeah, we don't want to pay. We just don't feel like it. It's like you already ordered, you already signed up for the debt, and now you don't want to pay it. Like, it doesn't make sense not to raise the debt ceiling, she says. She says if we fail, aka if Congress fails to raise the debt ceiling, we will have a financial crisis, interest rates will skyrocket, and we will face financial calamity. Then she was asked, is it correct that once the genie is out of the bottle, it doesn't go back in? That is, once we screw up and we mess up the debt ceiling, that now the calamity is unleashed, so to speak. She says that's correct. It would be a manufactured crisis, a self-inflicted wound of enormous proportions. Of course, she had these pre-prepared, but the lines are pretty damning. And I think the point is really just to convey the message to Congress, like, let's go, raise the debt ceiling. Anyway, she says nothing would be more harmful than failing to raise the debt ceiling. Then she moved on to answer questions about the stepped-up tax basis. So just a quick explanation of what the heck that is. Basically, I'm going to keep this very, very simple on the stepped-up basis because it can be very complicated. Let's say you bought a house for $300,000, and let's say nothing changes to that tax basis. Basically, $300,000 is your tax basis. It goes up to $1 million in value. Well, now you have $700,000 in gain. You can now sell that house, do a 1031 exchange if it's a rental property, buy another house, take that $700,000 gain, move it into the second property through an exchange. So you never paid taxes even though you sold. You can't do that in stocks. You can do it in real estate. Now, let's say that $1 million property goes up to $2 million. Now you have $1 million in gains, and I'm oversimplifying here. I know there's selling costs and all this other stuff, depreciation stuff. I'm simplifying. Now you have $1 million in gains plus $700,000 in gains in the other one. You've really got $1.7 million in untaxed gains. The stepped up tax basis says if you now get hit by a bus because let's say you were supposed to pay taxes on that $1.7 million, which, just for reference, taxes on $1.7 million, that kind of long-term capital gains would probably be somewhere around $400,000. So let's say you had to pay $400,000 in taxes, and you're about to sell that property and pay $400,000 in taxes, but then you get hit by a bus and die. The United States government says, just kidding, you don't have to pay us that $400,000, aka your children don't have to pay that $400,000. So your basis goes up. That's called the stepped up tax basis. Now your children the very next day could sell the property and not pay any taxes on that $1.7 million in gains. This is one of the big core tenets of the real estate investing course, where we talk about investing in real estate and taking advantage of the fact that you can build this insane long-term wealth and basically never pay taxes. Now, currently, there's a discussion about potentially removing this stepped up tax basis, which says, okay, there are plenty of other ways to make money with real estate investing, and it doesn't really benefit you until you die anyway. It's more of a family thing. But that's the stepped up tax basis. She says she is in support of eliminating the stepped up tax basis, that some income is just never taxed. The wealthy like this, basically what I just described. And she argues that there are two things you can do. You can tax those gains at the moment of death rather than giving that stepped up basis, or you can do things like just basically let the heirs carry that 1.7 million in gains, let's say in this example, not pay taxes at the time of death, and whenever the heir sells, then pay taxes. She sees this as a loophole. And so she wants to close this loophole, and Congress has discussed potentially closing that stepped up tax basis loophole. So then she mentions that clearly inflation this year is going to be above 2%. We are seeing it taper off, but it will probably end the year around 4%. Then there was a question. I'm going to keep this one brief because I really want to get to what Powell said. She mentions she was asked by Senator Loomis, hey, what's up with these new IRS disclosure requirements? Basically, Janet Yellen is saying, look, banks already report when you earn interest. What we just want banks to do now is report on that same kind of 1099-T form, the aggregate inflows to a bank account and outflows. The reason for that is they're trying to say, hey, look, if $1 million went into an account, 500K went out of an account, like, hey, did we get taxation on that extra 500K? Like, did we actually see taxes on that money? Because presumably if 500K was expenses, like, hey, was the other 500K taxable? Then she goes into talking about how we have a tax gap. Senator Loomis said, hey, this is a violation of privacy. Janet Yellen says, hey, look, we need to be taxing. We need more audits. We need to make sure people are paying their fair share. Then Mr. Rounds, Senator Rounds asked, what if we become the next Greece? How can we keep spending at unreasonable levels and creating these social welfare programs like the $3.5 trillion infrastructure package? She responded in sort of a twofold answer, and I'm combining responses here because she's responded this multiple times. She says, look, you could look at our levels of debt in two ways. One is debt to GDP, in which case it's high. But if you look at debt to payments, we're at a super low level. Interest rates are super low. Now, separately, I've done research on this, and I've noticed that even if our interest payments doubled, we would still be at a lower payment to income level in the United States compared to where we were in the 1990s. So we've got a lot of capacity to support these debt payments, obviously, unless interest rates just sort of skyrocket in the longer term. But then, of course, she mentions that this $3.5 trillion infrastructure package proposed by Joe Biden and Democrats in Congress will be fully paid for by higher taxation. Then this, of course, led to a lot of challenges like, hey, well, aren't these programs inflationary? For example, Tim Scott was trying to get Jerome Powell to comment on them, saying, hey, yeah, these programs create inflation. This is bad. Of course, Jerome Powell punted on that, which we'll talk more about Jerome Powell in a moment, but he just says he doesn't talk about fiscal policy. So totally punted on that. Yellen again says, hey, look, it's paid for by increasing taxes. Tim Scott says, hey, well, wait a minute. How are you supposed to make an economy and a marketplace more efficient if you're taxing capital gains instead of at 23%, but at 43%, or you're raising the corporate tax rate, which corporate taxes are usually paid by employees or consumers? Aren't you taxing away any potential gains to the marketplace? Janet Yellen took the counter approach here because usually, like just zooming out for a moment here, usually when you tax, you create a deadweight loss in society and you end up hurting economies. Generally is what taxes do. That's sort of textbook economics, right? Janet Yellen, however, takes the counter approach and says, well, wait a minute. We cut taxes like crazy in 2017 under Trump, especially corporate taxes, and we didn't see higher investment. Instead, what we saw is more hoarding of stocks and higher wealth for richer people. And so she's kind of countering with the opposite argument that, well, when we lowered taxes, we didn't see more investment. So if we raise taxes, why would we potentially see lower investment? That's sort of the argument that she's making here. In terms of the biggest risk in the economy, she believes that shadow banking is the biggest risk that could trigger sudden fire sales in the economy. She mentions that the National Economic Council is working on estimating when supply chain issues will be resolved and wants to, this was a big one, wants to find a way to make the child tax credit permanent. She says after just one payment of families receiving the child tax credit, that's $300 for children under 6 years old, $250 for children under 18 years old per month. We only have that for 1 year right now. In the $3.5 trillion package, there's a proposal to extend this for 4 to 5 years. Janet Yellen saying she wants to potentially make this permanent. She mentions that after just one payment, individuals who were food insecure dropped, or who reported they were food insecure, their families dropped by 24%. And that really the child tax credit is a way of helping people pay for food and clothing. She also says she's not in favor of mandatory work requirements to receive the child tax credit because there are a vast majority of individuals already working who are receiving them. There are income thresholds, obviously, for this. And some people who receive this are disabled or are grandparents who are retired who are also getting the support they need to help children. Now, let's jump on over to Powell. So that was a full summary of what the heck Janet Yellen just said. Now let's talk about what Jerome Powell just said. So Jerome Powell says, first, that you should get life insurance in as little as 5 minutes. A link down below by going to metkevin.com/life. There's also a new coupon code for the programs coming out. I think it's Diamond Hands. But anyway, the prices have gone up. But anyway, I don't know that that's even going to be in the description yet. Okay, what Jerome Powell actually said. Jerome Powell said, number one, it's essential to raise the debt ceiling. Potential effects could be severe of not raising the debt ceiling. He says we have not yet met the need for, or have not yet met the criteria for maximum employment. But he says that we're still going to be accommodative for the economy throughout mid next year. And so basically what he's saying is just because we're tapering does not mean we're at max employment. We're going to taper, but still accommodate the economy by still printing money, basically, buying bonds, essentially printing money, and in doing so until at least mid next year. Then, and he put emphasis on this word. He said, I'm going to emphasize it the way he did. However, the test for raising rates is substantially higher. He said that. I actually saw some tweets go out after he said that, and they forgot the word substantially. And I thought that was very, very important, and especially since he put emphasis on that. So he's saying, look, we're going to taper, but the test for raising rates is substantially higher, which is really good. Now, the Fed's already given us a forecast that they want to raise rates one time in the second half of 2022, 2 times in 2023, and 3 times in 2024. And these are 0.25% bumps, right? So that's the tentative trajectory. When asked about inflation, he mentions that he does see that inflation is much more structural now than what we saw with used car prices. And he says this is because of the supply chain issues. That supply chain issues have not necessarily gotten better, but they've actually potentially gotten worse. Look at port congestion, look at shipping, look at issues in China, look at issues at our ports. You've even got, I think it was the Port of Long Beach just put out an alert that they're starting to do 24-hour shifts in some cases. Well, 24-hour openings in certain parts of the port, not individuals doing 24-hour shifts. But anyway, he mentions that we believe inflation will come down, but you look at measured inflation, most of it at the moment that's high is still coming from a small category of items, and we expect that to be transitory. All right. He's mentioned that a lot, and obviously he's gotten a lot of heat for this transitory inflation being quite persistent. Then he talked about getting a central bank digital currency. He mentions getting this done is important, but even Pat Toomey was pushing for this, saying, "Hey, we want to make sure that we use this, that it's not something that's used to spy on Americans. It's not something that becomes a retail bank, but it's something that creates huge competitive opportunities, and we should really have a digital dollar. So let's get going on a central bank digital currency. That way, the private sector could start operating with it." And Jerome Powell agreed with this. Elizabeth Warren came out with, I think really she was trying to just zinger Jerome Powell. She asked him about the Volcker rule with private funds, to sort of cast doubt on some changes that led to potentially how Archegos collapse. Jerome Powell kind of dodged answering this question, but most importantly, from what Elizabeth Warren said, she basically tried to slam him. She mentioned that there are too many Republicans in positions of power, especially at the Federal Reserve. Keep in mind, Jerome Powell is a Republican. And she says that it's people like Jerome Powell that basically planted the seeds for the 2008 financial crisis. And therefore, Jerome Powell is a dangerous man, and she will not support his renomination. That was like a slam. Like, that literally got news coverage instantly. I mean, it was popping off. And that's obviously, I'm sure, what she was expecting. It's a very AOC-esque style statement. Very populist and potentially some would say progressive, looking out for the little guy. Anyway, then when asked about the biggest risk for the economy, Jerome Powell, and he's mentioned this before, although it never gets as much press as I think it deserves, he says the biggest risk to our economy is actually cyber. He says with banking, we have very good stress tests against the potential for collapses or a collapse. But what we have not yet really fully faced is a serious cyber risk. And so these are the updates on exactly what Jerome Powell said, on what Janet Yellen said. I think they're insightful. The market was selling off during their discussion and testimony throughout the day. Volatility index jumped, stocks fell. A little bit of a mess, a lot of uncertainty in the marketplace right now, and I'm sure later we'll have a thorough update on my thoughts on what's going on in the stock market. Volatility index right now up 25.3% on the day. That is not as high as it was earlier when we peaked around 30%. All right, folks, I thank you very much for being here. Really appreciate it as always. Check out the programs linked down below. Check out the life insurance you can get at Ladder Life by going to mettkevin.com/life. And folks, we'll see you in the next one. Thanks so much. Bye. Gotta find the end button, Kevin. Gotta find it.